Let's see here. So, yo, what is up for everyone on the YouTube replay? Hope you're having a great Tuesday because the market's having a pretty great day. I'm pretty sure we're at a brand new all-time high in two of our portfolios. So, let me start this off. Mm. With a quick portfolio update. I just drank this like yogurt smoothie and it was really thick. Actually, I haven't even drank all of it. It's right here. But anyway, look, the market or our account is up 1.89% today. And if we go to year to date, that's a new all-time high in this account, or year to date high, 1 year high, all-time high. Here's all the stocks that we own in here. Oh yeah, Bill, I'll show you what I'm buying. So here's my total percent change on every stock. So luckily we're up on every single stock except for Carlisle Group. Technically, if you include our dividends, we are up on this position, but it is slightly down. Hey, what up, Looney? What's up, man? So yeah, this is our main portfolio, which did hit a new all-time high today. I'm super happy. Congrats to anyone who didn't sell during Mondays and Fridays dip. And also the dip back in April. I'm a fan of just never selling stocks. I'm totally biased though. But here's our Roth IRA. Our Roth IRA is actually negative on the day, mainly from InnoData. InnoData is struggling a little bit, but yeah, that's our smaller Roth IRA. Also, our Moomoo portfolio is nearly at an all-time high today. I think it's like maybe $100 or less off all-time highs. But there's some stocks in here that have just been crushing it, like Coca-Cola Consolidated. I mean, this boring bottler is doing incredible. Check that out right there. New, basically. It's at the highest point ever since I've bought the stock. Powell Industries as well is creeping back up to all-time highs. Let me remove that. Yo, Powell Industries is not that far off all-time highs. So they have been an insane performer. Oh, someone said, what are some stocks on your watch list? Here's actually probably the more valuable watch list. This is my hidden gem watch list. These are companies that I really like right now. Like AbbVie, PODD, Wix is interesting, Main. So yeah. Have you invested in Bull? Actually, I have not. Hey, what up, Johnny9? What up, dude? So yeah, this is our Moomoo portfolio, or buy and never sell account that is doing amazing. So Powell Industries and Coca-Cola. And then finally, we have our Webull account. This is like everyone's favorite, my risk on portfolio. In the top left, we're only up 21%, which is actually still pretty decent when, we're up 21% all time. But yeah, here's how we're doing today. What's up the most? So AMD is up the most. AMD, Dave is up 5. Sprouts Farmers Market, another really green day on the Sprouts Farmers Market. Congrats to any shareholders here. This is our grocery store play that's kind of been struggling, but they're up 4% on the day. Let's go. SoFi's up 4. All these stocks are doing great. So yeah. Someone said UPS. UPS, I think, is a dividend trap. I would be careful. So what would you buy today? Here's actually the stocks I've actually been dollar cost averaging into. And you have to be so patient, especially in right now's market with things pretty overvalued. So the most recent stock I've actually bought is Ferrari, ticker symbol RACE. They have great numbers. I mean, I'm not just buying Ferrari because the stock dipped. I bought Ferrari because they have good numbers that I can trust. I mean, they have huge pricing power. They're easily making 400 to 500 mil in net income a quarter that grows every year. A lot of their cars are backlogged for multiple years. They're in such demand. They get a lot of sponsorship revenue. So pretty cool. I do like them. I might be biased though. Yo, I saw that, Looney. Aren't you a shareholder of this stock? I mean, you must be up like an insane amount. So yeah, this is Caterpillar right here. And I've been telling people, if I own this stock before today, I wouldn't sell it. I would hold on to my shares. I think it's going higher. And wow, it's at $530 today. And even though it's at all-time highs, even if you buy the stock right now, you still get a 1% dividend, and they raise the dividend every year to keep up, or actually at a faster rate than inflation. And even at all-time highs, they're only trading at 27 times PE or 27 times net income. I think the stock is up, maybe because of some acquisition. I don't know, or maybe it's just, or actually, let me go to the news down here. Okay, checked it out. Yep. Caterpillar acquires RPM Global to enhance mining technology portfolio. Pretty cool. So, yeah, a lot of industries need their heavy machinery like energy, transportation, construction, resource industry. And yeah, they make literally 2 to 3 billion in net income a quarter. So yeah, Caterpillar is a beast of a dividend growth company. So what up, Benedek? He said, UPS, this is one I'd be careful with just because I think that the yield is a bit unsustainable. Here's what I mean by that. Again, none of this is financial advice. I'll just show you the numbers for yourself. You can draw your own conclusion. Hey, what up, Larry? Hey, what up, Millers? So UPS, if we look at their yield right here, the dividend yield, this is what most people love, 7.8% dividend. So, you always look at total return. They're like, yeah, you get 8% of your money back in dividends, but you're also losing more than 8% stock price a year. That's because they unfortunately have lost their growth and they can't afford the dividend. So check this out. If you go to the revenue, the sales, the lifeblood of the company. I mean, first off, this isn't like a stock that you'd want to be in. Like the revenue is down 2.75%. They're kind of being out innovated by Amazon. And if we go to the net income's down by 9. So that means their net margin did fall. Low margin industry. But look at this. They made 1.28 billion in net income. Remember that number. They made 1.28 billion in net income, and the dividend literally cost 1.35 billion. So they actually weren't able to afford the dividend this quarter with the net income or last quarter. So, and on top of that, the revenue's declining. Their average daily parcel volume's declining. What the? Yeah. So you just got to be really careful with that one. I think I wouldn't trust it too much. So do you think Amazon's a good buy right now? I actually do. If you have the intention like me to just never sell, I mean, Amazon's worth buying even right now. I mean, this is such a great company. It's like an ETF in one. It's literally a UPS, a Walmart, an Instacart, an Oracle Cloud, like a satellite play. It's everything in one. It's an ETF in one, an e-commerce play, subscription play, advertising play, AI play, satellite play, robotics play, EV play. I mean, this is the company you want to own. And if we go to their net income right here, they're printing money, 15 to 20 billion net income a quarter, growing insanely fast because of their margin expansion. If we just go to their cash from investing activities, this is why I love them. They don't pay dividends, they don't do share buybacks, but the way they return money to you is by investing in the business and buying new businesses and investing in the future. So I love their capital allocation strategy where they love growth. But yeah, if we go to their AWS business, their Amazon Web Services, a lot of people don't know this, but this is actually their most valuable business. It brings the most into their bottom line, brings the most net income. It's over 100 billion of annual revenue for Amazon. They're the number one cloud service provider. They're not making too much net margin shipping you that package 1-day delivery, so that's what I love Amazon. Great, never sell. So data after this pullback, it still needs to pull back a lot more, but I'm up crazy on data. Well, maybe we'll check them out. So Trade said SoundHound AI. So if you're a shareholder of SoundHound AI, there's only one metric you want to watch, and it's the reason the stock is doing so well. The momentum's also just crazy on this name. And the momentum on like just everything right now is insane. But look at this. This is a subscription model. They have some audio subscription AI thing, and 75% of the revenues are subscription revenue. And check out the growth. This is what impresses me. This is why the stock is going up so much. Just a few months ago, the revenue was nothing. 400,000 a quarter, a nothing burger. Now it's 32 million. That was a huge beat on what the analysts expected. Look at this. The orange line's what the analysts expect. They expected 32. Well, they reported 42. Pretty cool. So that kind of explains. Usually the financials explain why a stock is doing really good or really bad. Like Lucid's doing really bad because of their numbers. So yeah. I bought in a cat. Oh, dude. Yeah, you're doing great. Hey, Prime. What up, man? Prime. And Marcus said EOSE. What's EOSE? Oh, yeah. Hey, what up, Cruz? Hope you're having a great Tuesday. We'll look at YYAI. So here's EOS Energy. They've had some insane momentum. I mean, wow. Let's see. Is there any news? EOS Energy formed strategic partnership with Unico. Cool. I don't know what that is, but let's check out their numbers right here because that's what matters. So, well, first off, these are insanely good expectations. So this quarter, they did 15 million of revenue. Well, in 2 quarters, they're expecting, or next quarter is 40 million, then 81 million. The revenue is literally going to go from 7 million to 80 million and over 10x and 11x basically. So that's probably why the stock is momentuming up so high right now because of the future growth that's being expected. So let's hope they don't miss on these metrics. I don't like the risk reward buying it here for sure, but I can kind of see why this one's doing well because of those expectations. Oh yeah, and the revenue has already been really growthy. Look, it went from 900K to 15 mil, and then it's 15 mil now to 81 million in 2 quarters. So that's my best guess. Hey, what up, Johnny? He said, got my follow. Hey, thanks. Yeah, hey, if y'all want to hit the follow button, we stream every day. This is our second stream of the day. By the way, I sell nothing. I have no course book, WhatsApp. I'll never follow you or DM you. Watch out for people impersonating me. So let's see here. YYAI short squeeze. Well, let's look at their short interest. I've never heard of this company. Oh, hey, yeah, we're not going to cover this stock. If you look in the top right, they're only worth $2 million. I mean, I'm sure someone in here is worth more than that. Yeah, we're not gonna go. Sorry, Sid. That one is just not worth our time. Okay, so let's see here. Hey, Adrian, he said BTQ. Let's check it out. BTQ Technology. This must be another quantum name or something. Let's see. Any news? I'm not seeing anything. So they're a $1.6 billion company. Let's see. Software license and related consulting services. So right now they have no revenue, so I don't love that. The revenue's down 27%, but it's only 48,000. They're only losing $1 million a quarter. Like, that's not even that bad of losses, $1 million a quarter. What are analysts expecting? 300K of revenue. I mean, nothing's really blowing me away here. I mean, there must be some sort of good news that explains the momentum, but those numbers don't look amazing. But of course, that looks like a momentum play, swing trade play. Gent, what up? He said CYRX. What's this one? CYRX. Let me take a sip of my yogurt smoothie here. So Cairo Port. Okay, yeah, another really small one. So this whole company is only worth 470 million. So do beware. That's an extremely small market cap, 470 million. But Life Science Services, the revenue looks a little choppy. Let's go to annual. But on the annual trend, it actually looks great. Hey, what up, Adrian? So yeah, the annual revenue growth looks good over there. Let's check out their other businesses. So that's half the revenue. Life Science Products annual revenue, that one's declining. So let me just go to their total revenue right here. Total sales combined are, whoa, come on now, Moomoo. What's the hold up here? Okay, so the revenue's up 14% year over year. They did 45 mil of revenue, and they're still losing about 10 to 15 mil a quarter, but it's narrowing. Look at that. These are all green year over year growth rates. So that's good news. It's not the end of the world. I mean, $400 million company, but they're losing 10 mil a quarter, but the losses are narrowing. The growth is kind of slow. It's up 15%, but it's easy comps because we're comparing to a quarter where it was down 30% after 11. So I don't know. I'd be careful with that one. Big live today. Have you look at Lyft? Oh yeah, hey, let's look at Lyft right here. Sure. Lyft. Wait, what are some of these other ones? What are the best dividend stocks and how much you make a month from them, if you don't mind? Well, I make like, out of all these portfolios combined, I make like $80 a month in dividends, or like when you average it out. But yeah, basically my favorite dividend stocks, if you look at the top here, this portfolio is called my dividend only. It's just called dividend only because every stock in here pays a dividend. So yeah, all these are mostly our dividend growth companies though, like Meta, Google, United Rentals. United Rentals is $1,000 a share now. I can't believe it. We're up 61% on them. So Constellation Energy, also new all-time high. I've been pumping Constellation Energy, nearly 400 schmeckles a share. I mean, I can't believe it. There's a lot of stocks that we own that are doing great. So let's get back to Lyft right here. I do like Lyft, but I also love Uber stock. Yo, what up, CAS? Yeah, remind me to look at, BYRN. Remind me to look at BYRN. So here's Lyft right here. Yeah, all those companies have like less than 1% dividend yields. Actually, real quick to help that guy out, my highest yielding plays are in my Roth IRA, like Iron Mountain. This Iron Mountain pays a 3% dividend, and Main Street Capital pays in the middle here, pays like a 6% dividend. So yeah, and here, maybe I can be really quick about this. Wait, where do I check that? If I go to P&L, yeah, dividends right here, year-to-date dividends. Yeah, here are all the dividends that I've received in this account, nothing too special. So yeah. All right, let's keep going here. So here's Lyft, again, like an Uber competitor. I don't think they deliver food. Like, I think Lyft only does like ride sharing. But let's go check out their numbers. So revenue's up 10% year over year. So revenue's going double digits, and they're finally net income positive. So if we zoom out on this stock, it used to be a tough buyback here. They were losing a lot of money, a couple $100 million a year. Well, now they're consistently making profits. For the past 3 quarters, they've made net income. The FCF, which has their free cash flow, flow is amazing, super growthy as well. So I know it's a proven business model. People need ride sharing and their stuff delivered to them. So I do like Lyft. I like Grab as well. I like Uber. I love Uber. Um, Uber would probably be my favorite pick. I think I've missed the boat on Walmart news today. Yeah, hey, wait, what was the news on Walmart? Wow, Walmart is up to a new all-time high. Whoa, Walmart, wait. Walmart shares uh OpenAI partnership offering shopping through ChatGPT. Oh, so you could buy stuff on ChatGPT's platform. You can buy stuff from Walmart on ChatGPT's OpenAI platform. So hey, that'll increase sales. I know they recently did this with Etsy and Shopify as well. Like whenever this was like a week ago, whenever OpenAI announced you can buy stuff on their website through, or you can buy Etsy stuff and Shopify stuff. Those two stocks jumped up on that news. So interesting. What app are you using? Yo, hey, what up, Sayin? Yeah, hey, by the way, if you want to get this, or this is actually a brokerage, just where you buy stocks on. If you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. So let's look at BYRN here. BYRN. BYRN. So this is Brandon Technologies. They're on my watch list, so there must have been something I liked because I don't remember going over them. If you look in the top right, they're a $566 million company. So they're not worth that much, but here's the good news. This is great news. The revenue's up 35 after it grew 194. I mean, they're continuing this growth. And out of this 28 million of revenue, they made 2.2 million in net income. So that's a near 10% net margin. Let's see here. Oh yeah, so 8% net margin, not too shabby. But here's the thing. Out of all this whole entire company is worth 566 million. Out of all the 566 million dollar companies out there, I want the one that's making a couple million in net income a quarter and that's growing at this growth rate. So there's a good balance sheet as well. Deleveraging went from their liability ratio went from 25 to 19. That's great news. So yeah, actually they're cool. Oh, hey, remind me to get to IONQ. I do want to get to that one. IONQ got a stake from Amazon, but they have no numbers yet. IONQ, this stock basically here, out of all the quantum names, this one is one of the better ones because there's a lot of trash quantum names, but this one did something smart. So basically IONQ, since the stock has been doing so good, they decided to dilute their coal companies for 26 billion. They decided to dilute the shareholder by $1 billion and buy a company for $1 billion. Because if you look at the revenue right now, the revenue isn't much. 20 million. Actually, that was from another, but the revenue grew 81%. It was 20 million. It's expected to continue to climb higher, but they're certainly overvalued. Certainly overvalued. Although IONQ acquires Vector Atomic for quantum sensing expansion. Okay, anyway. That's a quantum momentum name. Definitely overvalued here, but let's go to this next one here. I actually hit someone said, what was the last stock we were looking at? Oh, I forgot what stock we were looking at last. By the way, if you missed anything, I'm also streaming on YouTube and you can like replay it on the YouTube stream. So yeah, I think it was Walmart. I don't know. So DUK, what's DUK stock? Oh, wait, I want to get to some of these other ones here. Oh, I wanted to get to Nebius. Yeah, Nebius. Remind me to get to Nebius after this. So here's Duke Energy. Wow, they're at an all-time high. This is like just one of the utilities. You look at any utility, like Constellation Energy is at an all-time high today. Southern Company. I think NextEra Energy is still pretty far off all-time highs. But anyway, here's Duke Energy. Even if you buy this one right now, if you buy this stock right now, even though the stock is at all-time highs, you will still get 3.3% of your money back a year in dividends. And they raise their dividends every year slightly. But this is an electric utility. And let's go to net income right here. Easily over $1 billion of net income every single quarter. So yeah, that's a nice dividend growth play. I think they're one of the main holdings in VPU as well, or like top 10. This is the VPU Vanguard Utility ETF. And as we can just see, the literal Vanguard Utility ETF is at a new all-time high. What's the yield on this? Hey, you get a 2.5% yield on this one. What are their holdings? NextEra Energy, Southern Company, and then Constellation Energy, and then Duke. Look at that. Duke and Constellation Energy are nearly the same market cap then. Oh, King said, oh, wait, and we got to get to Nebius. Then we got to look at Pfizer. I want to get to Pfizer. And Grab. Hey, what up, Dat One, dude? We got to get to Grab as well. So speaking of, but going back to Nebius, and UI. Yeah, I love UI stock. Ooh, we'll look at ONDS after this. Yo, what up, Cruz? There's a lot of stocks I want to get to, but if we go to the NVIDIA portfolio right here, NVIDIA owns a bunch of individual companies. Like NVIDIA owns some CoreWeave, they own some APLD, ARM, and one of the stock they also own is Nebius. And again, I wouldn't just buy a stock because NVIDIA owns it. You know, you always want to go do your own research on it. And when we just go look at Nebius's numbers, I mean, these are numbers I can trust, and I can definitely understand why they're doing so well. The revenue went from 15 million to 100 million, you know, a huge increase, a 7x increase. And it was 100 million this quarter, a record. Analysts are expecting in 2 quarters, it's 265 million. I mean, the revenue is expected to continue to climb higher. That's mainly because Nebius Group secures a $17.5 billion GPU infrastructure deal with Microsoft. So, all those reasons combined equals a stock going to the moon, you know? So, yeah, I wouldn't buy them here, but I can certainly understand why they're doing so good. Hey, what's up, Lisa? What up, Larry? Wait. Oh, hey, GHGWH. Hey, I want to get to that one eventually. Don't worry. I wanted to get to this one first. ONDS stock. So, oh, and then Pfizer. Okay, so ONDS stock. This is Ondas. I think it's an autonomous. Maybe I think it's a lidar company. Maybe or let's go remind ourselves because I actually don't remember. So this is yeah, Ondas Autonomous Systems. So some sort of autonomous maybe a driving company. I don't know, but look at the revenue growth expectation. The revenue is going to go from 4 million to 9.5 million, you know, so the revenue is supposed to more than double. Again, we're playing with super small numbers here, you know, but 900,000 to 6 million is a good sign. So as long as they can continue this like growth rate, like if they could do revenue is going to go to 9 million, you know, hopefully they can do 40 million a year. And then, oh, but they're worth 3.5 billion. They're definitely expensive just because the momentum has been insane, just because the momentum on a lot of stocks have been insane. But that is interesting to see that some small. Oh, they just deleveraged their balance sheet like crazy. Look at that. Their assets went up and their liabilities went down. I'm assuming they diluted you. Let's see. Yep, they diluted the shareholder by 50 mil, but it had beefed up the balance sheet. Ticker symbol race. Hey, I do own that one in this account. All right, what software is this? Yeah, what up, Harry? By the way, if you want to get the software I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage where you buy stocks on. And full disclosure, it's an affiliate link. So if you go and deposit like $100, we'll both get some free stocks. But yeah, one of my new recent purchases, literally I bought them for the first time ever, these in the past week, basically, is Ferrari stock. Now, you got to do your own due diligence and be super patient in this market right now. You got to be so patient. So, I'm as much as I love them, I'm only starting my position out with 3 shares, nothing more. I'm being patient. I'm going to dollar cost average. But let's see here, Ferrari stock. Let me refresh this. There we go. So here's what I love about Ferrari. If we go to their net income right here, they're easily making 400 to 500 million in net income a quarter. The net income is growing double digits every year. They have a great dividend, a nearly 1% dividend yield on Ferrari stock. So that's great. Someone said Ferrari is terrible. Well, hey, that may be, Chaz, but yo, these numbers look good to me. And I mean, they're literally making 400 to 500 million net income a quarter. You get a 1% dividend, and since they have so much leftover money, they're doing share buybacks. They literally spent in the past year like 700 to 800 million of net income on share buybacks. So yeah. All right. Visa stock. Oh wait, we got to do Pfizer right here. So Pfizer, this one is really a dividend play. You're mainly buying this to, oh wow. Man, it's really sold off that entire government rally deal. That's unfortunate. Well, this one is just not a growthy of a stock. You know, if we go out to the all-time chart, Pfizer is the same stock price that it was in 1997. So you bought the stock in 1997, you are down on your position, or you're break even on your position. But the main reason people buy this one is for the yield, because it does appear to be somewhat safe, or it does appear to be safe. You get a 6.9% dividend yield. Here's how we can tell if it's safe. So if you go to their net income, they made 2.93 billion in net income this quarter. So remember that number. They made 2.93 billion in net income this quarter, and the dividend cost 2.45 billion. So as long as they make at minimum 2.45 billion, they're able to afford the dividend. And I would like to see them make, a significant more amount than that. And they have been, 3 billion the past 2 quarters. So that's good. Oh, dude, hey, try not to spam their resell. Hold on. All right. All right, let's see here. Hey, what up, German? Good to see you. Procter and Gamble is better. Hey, Procter and Gamble is a good staple company. but that's what up, Lane? He said BERA stock. Let's check it out. Wait, BERA. I typed in BERA. Unfortunately, Lane, I can't find that one. So yeah. What app? Yeah, hey, by the way, what up, Grunk? If you want to get this app I'm on, it's in the link tree in my bio, the first link there. Oh yeah, Visa stock. You know what? You know who owns Visa? That would be the genius investor, Nancy Pelosi. You know, we go to the Nancy Pelosi portfolio. One of the stocks she owns this here is actually Visa, and I wouldn't just own it because we got to look at SoFi too. Heck yeah, we got to get to SoFi. But yeah, if we go to Visa right here, they have a great dividend, a 0.66% dividend, and look at how they raise the dividend every year. So you're mainly buying this for the dividend growth, because, but not just the dividend growth. So you get a small 0.66% dividend. Check out this net income right here. They're easily making over $5 billion of net income, after tax net income a quarter. What are they doing with all that net income since the dividend costs so little? They're literally spending $4 billion of net income a quarter on share buybacks. I mean, that's the most valuable part about this. So if you go to the net income is up by 8%, but the net income per share is up by 12%. Again, the EPS growth and the net income growth should always be the exact same. So that's what's interesting. You basically get 3% buybacks, 0.7% dividends, a couple percent stock price appreciation. It should be a S&P 500 outperformer. Again, none of this is financial advice. By the way, watch out for people impersonating me. I'll never follow you. I'll never DM you. And I don't sell anything. I have no course, book, WhatsApp, Telegram, Discord. I got none of that. Okay, so Alfie said, MP Materials. Yeah, what we've seen right now, is the U.S. is taking stakes into the companies. So, Macquarie raises price forecast to $110 per kilogram on MP Materials defense deal. Oh, hey. So it looks like they're already getting some contracts, which is good news. Basically, the government can't let these companies go bankrupt anymore. Right now, China is really, if we look at the key event number 1 right here, China implements comprehensive rare earth export controls, where they're making the permit process a lot harder to get their rare earth minerals. So we have to be more rare earth mineral independent. So that's why the government is taking stakes in the MP Materials, Lithium Americas. So they should, like the MP Materials one, the government is opening up this one rare earth mineral mine that'll supply the U.S. for the next 50 years of certain rare earth minerals. So yeah, let's go to SoFi right here. SoFi is one of my favorite ones. I actually do own some SoFi stock. They've been one of my best performers. We're up 370. How are they doing? They're up 4% on the day, so they're doing pretty good on the day. Wait, was Robinhood up 7? Or no, that was Dave. Dave was up 7. Okay. Anyway, back to SoFi right here. This is one of my favorite fintechs out there because they're not just propped up on momentum. I believe this stock deserves to be doing this well, deserves to be up on the day, because if we go to where the revenue comes from, 42% of it is their financial services. And check out how the financial services business has been growing. It's up 105% after growing 80, after going 222. Like, the growth is an absolute monster on SoFi. And the analysts didn't expect this. I mean, you can see the analyst expectations down here. That's the orange line. Every quarter, they're beating on revenue expectations. They're beating on net income expectations and on EBITDA expectations. So I really just think people are taking SoFi serious. They're making good net income every quarter. So yeah. Let me actually go check the Robinhood portfolio as well real quick. I think we're at a new all-time high in this account today. We're doing great. This is our dividend-only portfolio. All right. Wes said, what apps are you using? Yeah, hey, by the way, all these apps I'm using are all in the link tree in my bio. They're all brokerages. And they're all affiliate links too, full disclosure. But out of all the brokerage, out of all these, you can buy stocks on any app right here. But the one I'm on right now is my favorite brokerage because of all the tools that it has. And you can do like the poor Nancy Pelosi tracker, all that. Yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio. It's the very first link. Okay, and affiliate link too, full disclosure. So if you go and like deposit $100, they'll both get like some free stocks or something. So, oh yeah, so UI stock, this is Ubiquity. Like, I can't believe how good this company's done. You want to see a huge L? I think I sold this one. Look at that. How many shares did I own? I only had I had 2 shares. I had 2 shares, but I sold it at 118 and it's 760 today. So this is a stock. I love this company. They deserve to be doing this well. I mean, you can usually understand. You can find out why a stock is gapping up on earnings so much, usually just by going to the analyst expectations versus what they report. And every quarter, they're beating by a huge margin. I mean, analysts expected 635, and they reported 759. If you go to the net income, a literal double beat on net income. I can't wait to go see their margins after this. A huge beat on EBITDA. I mean, talk about a gangbuster quarter. So if we go to revenue, revenue is up 49. So revenue is up 49. But net income is up 156. I kid you not. So that means their net margin expanded from a 20% to a 35%. I mean, that just adds money to your bottom line. That's insane. And you get a small yield here, a 0.3% yield. Ubiquity is a beast. Would I buy them here? No, but congrats if you own them. Beatish said GTN stock. What's this one? Oh, Gary Media. I haven't heard of them. Oh, yeah, we got to look at ASML too. I want to get to that one eventually. And the Honest Company. Yeah, the Honest Company is struggling. The growth is kind of gone on there, unfortunately. But here's Gary Media. So very, very small company. They're only worth $490 million. So, oh, dang. So their stock is lower than it was in 1998. If you bought the stock in 1997, you are down 68% on your position. But it's a broadcasting business. How's that doing annually? Well, it's actually growing. I mean, it's not shrinking. Well, it is down 5% year over year. But analysts expected that. I mean, they slightly missed on revenue. Oh, they missed on net income. Bad. So I guess that wasn't good. But yeah, so this is what you don't love to see. You know, the lifeblood, the revenue is down 6.5%. You know, last quarter it was down 5%, and the net income went negative. That was a one-time adjustment though. The actual profits only fell 31%, but still, nothing's really blowing me away here. That probably explains why the stock has kind of just been flat for a while. I mean, they're just not really growing, or they're even shrinking, actually, losing on top of that to inflation. So, hey, Maddie, wait, maybe you were here. We just looked at MP Materials, Maddie. If you give me a minute, we'll check them out. G-Lu said APLD. Oh, yeah, then we got to get to ASML. What up, Peter? I don't know what you mean there. What are you? I'm just on my phone right now. I'm on different platforms. Okay, so speaking of APLD, you know who owns APLD? That's actually in the NVIDIA portfolio right here. So, hey, user39, completely changed how I search and judge stocks. Thank you. Yeah, hey, that's what I hopefully try and do. You know, if you're going to buy the dip on a stock, you know, buy the dip on a stock that at least doesn't deserve to be at an all-time low. You know, there's some stocks with just terrible numbers like RXRX, their terrible net income losses explains why the stock is at an all-time low or close to it. But anyway, speaking of a stock that deserves to be at an all-time high, like the numbers, the financials in the long run outshine, and it always, in my opinion, explain why a stock is they're doing really good or really bad. And here's a great example of APLD is doing really good because of the really good numbers. So check this out. And here's how we can see the numbers. Yeah, hey, what up, King? Yeah, hey, if you want to get this platform I'm on or this app I'm on, it's in the link tree in my bio, the first link there. It's a brokerage where you buy stocks on, but sorry, this isn't loading. There we go. APLD. So the orange line right here is the analyst expectations from S&P Global. The analyst this quarter expected 45 million, and they just reported 64 million. It was a huge beat. So that absolutely explains why they gapped up on earnings, because it was such a huge beat from what the analysts had expected. And not just beat on revenue, but also a big beat on net income losses. So they lost less net income than expected and made more money than expected. They're a data center hosting business. NVIDIA does own a little bit of them. Would I buy them here today? No, but I can totally understand why they have been doing so well, and I probably wouldn't, sell out of them. Yeah, hey, try not to spam there. Hey, what's up? Wait, Logan, you had a stock you want me to look at. I forgot. Oh yeah, let me look at the Honest Company. Then we'll get to ASML. Yeah, here I'm gonna have to. Don't worry, we'll look at ASML after this. We'll have to mute that guy. But anyway, here's the Honest Company. This one I just don't love because of its slow growth. So, and this probably explains why the stock, has kind of just been trending down the past couple quarters here. So, if we go to the revenue of the company, it's the sales are only up 0.44% year over year. So, the revenue being only up 0.44 isn't great. That doesn't beat inflation. So, I really just would like to see more growth. And they just sell a commodity. They sell diapers and wipes. That's 70% of the sales. So nothing. I don't see this one really outperforming the S&P 500 in the long run, but it's an interesting small cap. But what's up? Yeah. Hey, by the way, this is a brokerage right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. Kind of cool. So, okay. Let's look at ASML now. All right, so ASML, this is an EU company. So, ASML, this one kind of they've been flat for a while, but they finally like deserve to go up now because their most recent earnings report was really good, and that's why I think they've just been slowly grinding higher. Because I think investors realize that their numbers were really good and they probably deserve to go back to all-time highs. If we go to their revenue grew 35%. So revenue's up 35, and the net income is up by 86. So that means they grew net margins, record net margin, 35%. It's never been even close to that before. Record net income quarter by far. You also get a dividend with this company, 0.8% yield, 33% payout ratio. This is your lithography company. They make the chip making machines for three customers. It's Samsung, Intel, and NVIDIA. So yeah, there's your ASML stock. Hey, no way. Shout out to Isaiah with the heart signal. Dude, thanks so much for that gift. I really do appreciate that. Yo, if you got a stock here, oh, we said ALAB. Let's do it. ALAB. I think they were down today. Yeah, down 17% on the day. Let's see if we can figure out what happened here. Astera Labs unveils AI infrastructure solution at OPC Summit. Maybe their presentation disappointed investors. I don't know. Maybe this might be a buy the dip opportunity. Who knows? I love their numbers. Astera to join ARM Design. So they're joining ARM. That's what I remember hearing. ARM was really green on the day. I was looking at ARM earlier because ARM is a stock I would love to buy at a much lower valuation. But let's look at their numbers right here. This is why, like before today, before this, huge gap down, the reason they were literally at all-time highs 2 weeks ago, doing insanely well is because of their insanely good numbers. If you look at the revenue's up 159% after it grew 600%. So the revenue literally just hits a new record every year, every quarter, and not just revenue up. So they did 191 mil of revenue, but look at this net income, after-tax net income. This is incredible. 50 mil, 40, and this is an insanely good balance sheet. Literally no net debt, or no debt, just no debt at all. $1 billion of cash on hand. So this is one, like the financials check all the boxes. Like that's a good one, good growth name with financials I can absolutely trust. Favorite ETF? Yeah, that would be QQQM. It's the lowest expense ratio fee to really get exposure to tech. If you're a young investor, you legit just want to buy QQQM and never sell. It's the same thing as the QQQ, same NASDAQ 100 strategy, just with the lower expense ratio. We said WWR expected to do 32 billion in revenue by 2026. Really? That doesn't seem right. But if that's true, then that's insane. Let's see if there's any comments down here. Hey, no way. Yo, shout out to the homie Maddie on the YouTube stream. He said coffee time. Dude, I would love a coffee right now. I am like a little tired almost. But yo, I've been up since like 4. Was anyone here on my stream this morning? Okay, but anyway, this is a revenue-less company. So right now the revenue is 0. But whoa, hey, look at that. You're right. You're right. Lee, look at that. He says WWR expected to do 32 billion in 2026. I mean, that's there. I mean, that's on the S&P Global estimates. That's for the full. That's what FY stands for, full year 2024. So that might be why they're momentuming higher. Yeah, hey, I'm not sure what you mean there, Peter. I don't. These are all different platforms. I'm on my phone. I don't know what you're asking there, Peter. How do you view all your holdings across different platforms? I mean, I just switched platforms, right? I saw you like ask that a couple of times. I'm not sure how to answer that. What's in your portfolio? Here, I'll show you all my holdings real quick. I have a different goal with each portfolio. Like this is my dividend only portfolio. Every stock in here pays a dividend. This is my buy and never sell account where once I buy a stock in here, I try not to ever sell it. And this is my risk on portfolio where we buy a lot of risky stuff, momentum stuff. Hey, Dave is up 6. Sprouts Farmers Market's up 4. Toast is up 5. What's down on the day? Oh, wow. UiPath, of course, is down. Reddit's down. Robinhood's down a little. Oh, well. What was the QQQ? Oh, yeah, that was QQQM. So it's literally the exact same thing as the QQQ, just with the lower expense ratio. For every $1,000 you put in, you save $15 a year in expense ratio fees by switching to this one. The reason they don't market QQQM is because they would make less money, because it's literally owned and run by the exact same people as QQQ. They just don't market it. So there you go. Saves you $15 a year in expense ratio fees. Okay, I had worked in the AM. Yeah, you're up pretty early. Hey, what up, Jose? Yes, sir. Yeah, this is our second stream of the day. So Jose actually said URG stock. Let's check it out. So, oh, they're on my watch list actually. I wonder when I put that on there. What about Invesco outright? Actually, what's their ticker symbol? Maybe we'll check out Invesco. We'll check out the people that own the QQQ. We'll see how much expense ratio fees they're making. So here's UR-Energy. This might be a uranium play. They're worth 750 mil. Let me actually double check. So yeah, it's a uranium play. So it's an exploration stage uranium mining company. I'm assuming no revenue. No, they have revenue. That's interesting. Check that out. The past year is basically when they got all this revenue. 10 mil, 20 mil, 6 mil. At this growth rate, what's the revenue going to be the same time next year? I know right now uranium is heavily into, or the uranium stocks are rallying like crazy because we're no longer buying uranium from like from China and Russia. So we're now trying to source our own uranium from Canada and the US. So if you just go to the entire uranium ETF, if you just type in ticker symbol URA, this is the uranium ETF right here. And just this whole, well, if it load here, there we go. Yeah. So the Global X Uranium ETF. Okay, I might have to reset this app. Oh, I need to get my actually the charger's right here. There we go. Yeah, so look, this ETF is at an all-time high. So it's kind of just the whole uranium industry has been on fire, the momentum. So, okay. North Carolina floods. Uh-oh, that's not good. Hopefully, Coca-Cola Consolidated is headquartered there in Charlotte, their main bottling factory. Yo, Coca-Cola Consolidated is doing really good. I see someone said user76 said ASTS. Let's check it out. What up? So ASTS, this is a super momentum-y space company, and I know why it's momentuming higher, because they're about to make a bunch of revenue. They're about to recognize their contract revenue. If we go to their current revenue, it's bad. You know, it's $1 million of revenue a quarter. But if we go to what the analysts expect, literally next quarter, revenue is going to go from 1 million to 22 million. Then after that, the quarter after, 35 million. So that's what's really interesting. I definitely wouldn't buy it here though. Well, hey, Eric, what's the ticker symbol for Copart? Yo, you're live. Been waiting for 2 questions for you, bro. What up, M? What question you got? Let me know. HTO stock. What's this one? H2O America. Oh, it's kind of like water. H2O. Okay. Unfortunately, they've not done well. They're the same price as they were in 2016, so 9 years ago. Yeah, it's a water utility. Now, what's the net margin on that? Oh, it's actually double-digit margins. That's actually pretty good. Look at that. They're easily making 20 to 40 million of net income a quarter. They expand in margins. You get a dividend, and you get a 3.5% dividend. So here's kind of what you're hoping here. 3.5% dividend, and then hopefully like 3.5% stock price appreciation. But the stock is not appreciated up too much recently. I wonder why. They're beating or meeting on expectations. I wonder why they're not doing too well. Maybe they're just kind of boring. What was that last space one? Oh, that was ASTS Space Mobile. Yeah, ASTS. By the way, if you missed anything, I'm also streaming on YouTube and you can rewind it. That's the #1 way to support me, by the way. Just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, if you just type into YouTube Nathan Robert, you'll find it. So M3 said IDXX stock. So IDEX Laboratories, let's check it out. They're a $50 billion company, so they actually have a really big market cap. And they had some really good earnings for them to gap up like that. Let's go figure out what happened here. So Companion Animal Group. So that business grew 11% year over year. I wonder what that is. Let's see. So they had a really nice actual beat on the expectations. Revenue was 1.06, or revenue expected was 1.06. They reported 1.1. They beat on net income and they beat on EBITDA. So it was a triple beat quarter, and it was a good. They beat by a good margin. Yeah, they expanded their net margin. Look at that. So the revenue is up 10. So revenue is up 10. But net income is up by 44 because of this margin expansion. Net margin went from 20 to 26. And that's what really boosts the net income up higher at a faster rate than the sales growth. So pretty cool. I can see why they're doing so well. You are best at explaining. Hey, Mikey, what up, dude? I appreciate that. Trilogy Metal. Hey, funny fact. What's the ticker symbol? Yeah, hey guys, if you have a stock you want me to look at, let me know what the ticker symbol, and we'll try and find it. Is this TradingView? No, hey, this is not TradingView, by the way. This is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Full disclosure, it's an affiliate link too, so if you go and deposit $100, we'll both get some free stocks. So let's look at GWH right here. Yeah, let's check it out. ESS Tech. So, we don't really, okay, so this is a $120 million market cap. So it's an extremely small market cap. They're down 16% of the day, but they've been momentuming up higher the past couple days here. I want the weekly chart. Yeah, the weekly does not look good, From 260, just in 2021, not that long ago, it was 250. Now it's $8. Let's go see if we can figure out what happened here. So, so they're losing a bunch of net income every quarter. 10 to 20 million of net income. And yeah, whenever you lose net income, that money has to come from somewhere. So check out their assets. Their assets just decline every quarter and quarter. Notice the liabilities stay the same, but the assets just decline every quarter from these net income losses. So honestly, the stock was probably it seems like they just got access to $40 million. So that's good news. At the top there, it says they got access to $40 million, because before that transaction, I mean, there probably is still real bankruptcy risk there. I wouldn't trust a lot of money in that one. So let's see, CPRT. Let's do it. Thanks, Eric. I'm looking for 2 new stocks long term and 2 stocks small that can grow quick. Hey, we always want a stock that can grow quick. But hey, I always tell people stocks isn't get rich quick. The goal with stocks is to slowly build and preserve wealth. With the S&P 500, something news just dropped. Actually, I wonder what happened there. But wow, I actually want to go figure out kind of what happened there recently. Does anyone know? But yeah, hey, egg mayo. Yeah, hey, good question there. Yeah, it looks like the whole market just taking a little bit. I forgot. I lost my train of thought there. Anyway, let's get back to Copart right here. Let's go look at their numbers. Yo, market closes in 10 minutes. Closing cross. So 40, maybe there was another tweet, but actually I could go check the Moomoo news and maybe let's see if they have the news. But yeah, Copart right here. Let's go look at their numbers. They haven't been doing too well recently. If we look at them the past couple months, yeah, check that out. A nasty little D trend. Let's see if we can figure out what happened. Did they miss on expectations? They did. So the past 2 quarters, they missed on revenue expectations both times. They beat on net income. So it's that's interesting. They're making good numbers. Actually, these are great numbers. They're making nearly $400 million of after-tax net income a quarter. They have this phenomenal balance sheet, no debt at all. Yeah, $4.8 billion of cash and no debt, earning $400 million a quarter. So 10% of the market cap is just cash. So you can do an X cash PE multiple. They're actually trading at a very fair valuation, I wonder why they're trading down so much. That's weird. So let's go here. Let's go check out the Moomoo news here. Let's see if they have the news. Nope. Wait, 1 minute ago, S&P is lower amid renewed U.S.-China trade concerns after president criticized. Okay, well, anyway. Headlines. Okay. Is it too late to get into AMD? Probably. For right now, yeah. TMC stock. What up, Takua? So TMC stock, this is still a startup. But if they can pull this off, which I really don't know if they can, But it would be insane. Basically, they're making these underwater like robots that suck the nickel and like cobalt or whatever out of the water. And then they're gonna sell it. But this is a complete, startup proof of concept. They've never sold anything, never sold a product or a service. But they're kind of seen right now as a rare earth mineral play because they'll get the minerals out of the water if they're even able to pull it off. Against, I think they're years away from any revenue. So I just completely avoid that one. I'd rather watch the stock triple and stay out of it and wait for them to finally have some revenue. And I don't think it'll but yeah. TMQ. Okay, TMQ. Oh, I want to get to Salesforce too. The user, keep reminding me to get to Salesforce because I do want to get to them. And I want to get to NVIDIA as well. I love NVIDIA. Looks like this stock is up huge, up 58%. There must have been some sort of good news. Probably did that rally like just happen? Probably on the escalating tariffs that happened 10 minutes ago. So, yeah. Trilogy. Yeah, okay. So, is that what this company is called? Yeah, Trilogy Metals. If we go to the revenue, it says zero because again, they've never sold anything, not a product or a service. They have a really like that's what you see. If you go to Lithium Americas, they're just like this. Like Lithium Americas has literally no debt, tons of cash. So they're in a great financially sound position. Like they can afford to lose $1 million a quarter with the balance sheet like this. But hey, that's interesting. Maybe the government took a stake into them the same way they did MP Materials. Look at 80M. Hey, is that a what up, Joel? Is that I'll type in 80M. But yeah, that's not a stock ticker symbol. I can't find that. So, where do you check the news? Oh yeah, hey, McKay, you just click on Discover at the bottom, and then you just click on News right here. And what's cool is you can filter it by watch list, and it'll only show news for certain stocks right here. Anyway, there's a lot of cool features over here. You can also, if you're trying to discuss, oh wow, Nasdaq's down 0.8 now. Yikes. There's also I want to do a streamer one day where we just look at and find new stocks. Like we were looking at some drone stocks. Basically, there's like a bunch of ways you could like find new companies like robotics or the monkeypox beneficiaries like T2. And anyway, what app are you? Oh yeah, hey, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Okay. Or you can just type it into Google. It's just a broker called Moomoo. But full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. They ask you for a bunch of information because it's a broker. Okay. Did you analyze RGTI? Yeah, hey, German, we're not going to analyze RGTI. They're completely worth not touching at all. Super momentum-y, no fundamentals. One of the worst or more bubbly quantum names for sure. So here's Energy Transfer. I want to warn people that this isn't a stock. You're actually buying units. Oh, hey, that one dude or Luffy, you still in here? I want to look at Grab if you're still in here. I forgot to get to that one. But here's Energy Transfer. This actually isn't a stock. You're buying units because this is an MLP. MLP stands for, oh, that sucks, capital. Yeah, this brokerage is not available in certain countries. I know it's available in Canada and Europe, but I don't know about other countries and in the US, obviously, this brokerage. But anyway, Energy Transfer, you buy units of this, and they send you, basically what I'm trying to say is avoid this one because they send you at the end of the year a K1 tax form, and they're notoriously complicated to fill out. I accidentally bought 2 MLPs when I first started, and it cost me $300 with an accountant to get it filled out. So you're buying this for the income, the 7.8% yield, but just be aware you get the K1 tax form, and for some people, it's no big deal. You just hand it over to your accountant, and it's all good. So Professor Pumpkin, no way. He said GPN seems cheap right now. Is that Groupon? What is this right here? Global Payments. Nice. Oh, we'll look at SNX after this. Of course, when I buy InnoData, next day it's down 7. Hey, I would not have bought InnoData anywhere near its current price. I love InnoData, but it's ridiculously overvalued right here. So yeah, I would be very slow to allocate more to them. But I wouldn't sell out of them. I'm still a believer they're a winner in the long run. So maybe we'll cover InnoData. Yeah, should we look over InnoData? And I want to look at CNC and some of these other ones. So anyway, here's Global Payments right here. Haven't heard of this one before. They're not doing too well either. They're the same price as they were in 2017. So let's go figure out what happened here. So net income's negative. Oh, so just revenue's negative. So the lifeblood, the revenue's down 0.7. after it fell 19. So they're on this like declining streak, which isn't great. And not only is the revenue declining, but the net income is declining at a faster rate, which means the margins are collapsing. If we zoom out, they used to have 15 to 19% margins. Now it's 12, 12, 12. So the margins are choppy, or they're shrinking. You still get a great yield, a 1.16% yield. They grow it every year. Safe payout ratio for sure. But I just think that investors aren't too happy with the fact that they're not that growthy. Add inflation to this, the revenue's down bad. It's negative the past two quarters, like single digit or negative sales. That is why they're cheap, I think. There is a company that's going to test nuclear energy in Kansas. Uh, hey, it's called hey, MK1. Is there a stock ticker you want me to look at? That sounds interesting. My best and favorite nuclear play of all time is CEG. They literally own 30% of all the US nuclear reactors. I do own them. Full disclosure. So SNX stock, then we'll get to CNC, and we got to get to Nvidia. What up, Stinky? He said Nvidia. Let's do that one too. And MU, Neo's a bad one. I don't. Neo's not terrible, but they just lose a bunch of net income. Oh yeah, Yum Brands. Remind me to get to Yum Brands too. So here's TD Synex. I haven't heard of this one. The stock actually hasn't done too well either. Same price as they were back in 2020, so 5 years ago. But that's okay. Let's see. So revenue's growing mid-single digits, 6, 7, 4. So mid-single digit revenue growth, but they're making good net income. At least they're profitable, easily making, 180 to 200 million of after-tax net income a quarter. That's great. And you get a 1.1% yield. Look at how they raise the dividend every year. Safe payout ratio. What was the revenue? I would maybe like to see a little bit more growth, not like just single digits. That might be why the stock is, kind of flat on the 5-year, but it has still trended up the past couple years. Are they doing share buyback? So net income is up by 27. Net income per share is up by 31. Or nearly 32. So yeah, they're actually doing quite a bit of share buybacks. That's actually pretty good. So CNC, I believe this is that Medicare Medicaid stock. Um, you know, I don't know if the worst is over because these companies the decision is still being waited on for basically they were overbilling the federal government and stuff. But yeah, this is your Medicare and Medicaid play. So look at this: 57% of all the revenue is Medicaid, and then 20% is Medicare. And basically, the government doesn't want them having as high margins as they did before. They don't want them making as much money. So the future outlook of this industry is going to change, and that's why this huge gap down. But I wonder if the worst is over for them. I don't know if the risk reward looks good here, but do note, because the net income is supposed to collapse is still net income. They're always making EPS every quarter, which EPS is net income. But look, the net income is supposed to go from 56 to negative $1.28. So yeah. So Salesforce right here, Salesforce actually, they're losing to the AI thesis right now. Hey, what up, Chase? Yeah, what up, dude? So Salesforce, their agent, I'm not a big fan of their agent force stuff thing. It's almost like a ChatGPT wrapper, but I do like a lot of their other assets, like Slack is great, their agent mule thing. But look at this right here. I love how diversified the revenue streams are. 24% service, 22% sales, platform and other, integration, analytics, marketing, commerce. I love how diversified that they are. They're expanding net margins. They're easily making 1.5 to 1.9 billion in net income, and it's just going to continue to climb higher. And they just, let's see if there's any actually news around Salesforce down here. Salesforce commits $15 billion in San Francisco for AI development. Salesforce and OpenAI form strategic partnership for enterprise solutions. Salesforce launches global expansion of Agentforce 360 with voice capabilities. Partners with Anthropic for regulatory. Anyway, I think it's worth nibbling on Salesforce right here, but I wouldn't make it a huge position. I definitely think they're worth looking into. Hey, what up, Mills? Good to see you. KVUE will rebound. Well, I don't. This is the company that owns Tylenol. Out of all their revenue, out of their entire revenue, it was about, I think, 15% of this. 15% of this entire company is Tylenol. So, it wouldn't. it would affect it, but not crazy. But look at this right here. I don't see the sales of Tylenol really like. It'll probably unprice maybe some of the fears, and there might still be some lawsuits and stuff. But here's why I would still stay away from KVU. Like even before all the Tylenol shenanigans, this wasn't really a great company. You know, this was spun off from Johnson & Johnson, and notoriously Johnson & Johnson gave them way too much debt to really clean up their own balance sheets. So they have more debt than I would have liked. They're not growthy. You know, revenue's down 4%. Last quarter was down 4%. And they also are struggling. Actually, I don't think they can afford the dividend. Let me actually double check that. So this quarter, they made $420 million. Last quarter was $320 million. Then it was under $300 million. Let's just say they're making $350 million in net income a quarter. Let's just say $400 million. They're making $400 million of net income a quarter. Well, the dividend cost, here's the thing, because they pay a dividend, the dividend cost exactly $393 million of net income a quarter. So they were able to afford the dividend this quarter, but they only retained $20 million after this because they made $420 million, dividend cost $400 million. And look at last quarter. They couldn't afford it last quarter. And the quarter before, they also couldn't afford it either. So the payout ratio is 100. I just don't love that one. But what app? Yeah, hey, what up, Carl? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. Dude, Frank, no. I have to mute him. Okay. Okay, let's see here. Is ALAB still a buy? ALAB is on the watch list right now because they have great financials. FCU, hopefully we can find that stock there. Yeah, unfortunately, MK, we're not able to view that stock right there. Can you view Beyond Meat and it's gone? Yeah, so Beyond Meat deserves to be at all-time lows. We saw this coming from a million miles away. So if you look at the top right, the market cap, what the whole company is worth, the whole entire company is worth $59 million. So just think about that in the back of your head. You could buy this whole entire company for $59 million. So let's say you own it. You pay $59 million and buy the whole company. Here's what you're buying. You bought an asset that lost $30 million of net income this quarter. The previous quarter, it lost $52 million, then $45 million. So they're burning through net income at an extremely unhealthy rate that literally sent them to bankruptcy. So no wonder they're at an all-time low. Would not buy the dip on them unless you have some plan to like swing trade it or a plan to get out quickly. But yeah, I wouldn't trust that one. So Chase said IREN. I actually like this one. And hey, what up, Fiscal? We'll try and look at Webull as well, BULL. So, we'll look at NU Holdings. I love NU. So, hey, thanks, Em. I appreciate that. Hey, yeah, if y'all are enjoying the stream, make sure to hit the like button, hit the follow button. We stream every single day. This is our second stream of the day. Sometimes we do 2 streams a day. And by the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Watch out for people impersonating me. But anyway, here's IREN right here, Iris Energy. This stock, if you're ever looking at a stock and they're at all-time highs, usually their numbers explain why they're at all-time highs. If we go to the revenue right here, this is what's insane, and this is what justifies the major stock price appreciation. I mean, the sales are up 230 after they're up 104, after they're up 124. So the revenue just is at a new record, but growing at an insane rate, like more than doubling every quarter. And not just making revenue, but now net income. You know, the past 3 quarters, they're making good net income every quarter. So I really just think people are starting to, the growth is expected to keep on growing from 188 to 264. So Iris Energy is pretty interesting. Let's see if there's any AI news down here. IREN emerges as key player in AI infrastructure with advanced GPU operations. IREN co-CEO compensation reaches $72 million of compensation. Jeez. Probably just because of how amazing the stock price is done. I guess they earned it. Oh, I forgot to get to NVIDIA stock. Heck yeah, let's do NVIDIA right here. I wanted to get to that one earlier. We haven't looked at NVIDIA at all today. So NVIDIA, this is obviously your main GPU play, AI play. You know, their main customers buying GPUs are the most cash-rich companies. The other Mag 7, you know, Google, Meta, Amazon, OpenAI, Oracle are all pumping NVIDIA chips right now, chip orders. And we can see their GPU market share. Obviously, we know they have a huge 24% GPU market share. They have an automotive software that kind of competes with Tesla. But the main reason this stock deserves to be at all-time highs is because of this insane net income growth. I mean, they literally made $26 billion of after-tax net income just this quarter. I mean, look, the margin's insane. They did $46 billion of total revenue. So $46 billion of total revenue and $26 billion of after-tax net income. So yeah, that's easy math, near 55% net margin. So you go spend $100 on an NVIDIA GPU, they literally keep $56 of it as after-tax net income. So they're probably overvalued. And the law, that's another thing. The law of large numbers is a tough look for them, because if you look in the top right, the market cap, NVIDIA is worth $4.37 trillion. For if you buy the stock right now, for you to double your money on NVIDIA, they have to be worth $8.8 trillion. And that's a tough double. So that's actually why my semi play is actually where is AMD? AMD Dizzle right here. So yeah, we got 11 shares of AMD. They're only worth $353 billion. So that's why I thought it was an easier double. But I love NVIDIA. They'll probably both do great together. So Theo said, VNRX. What's this one? Oh, wait. We got to get to, UNH stock and SoFi. Oh, I love all these. So we don't usually cover these kind of stocks because, yeah, if you look in the top right here, they're only worth $49 million. You know, that is pure speculation at this point. But buying a company worth that little is just so unproven. Like how do you? It's just hard to trust this kind of company. Like if you just glance at their numbers, usually, if I'm gonna buy a dip on a stock, I would buy the dip on like a Sprouts Farmers Market, not this one, just because of their terrible numbers. Like they deserve to be at all-time lows. I mean, they have like the assets, their assets are 4 times lower than the liabilities. The sales are 400,000 a quarter. They're losing $6 million, and when you lose $6 million a quarter, and the whole entire company's only worth $49 million, that's devastating. Yeah, they'll probably keep on going to all-time lows. So Fiscal said BULL. Yo, that's Webull stock. You know what? I actually have a Webull account right here. So I have given that company, here's my Webull brokerage right here. I've given this company a lot of transaction fees. So yeah, here's their stock publicly traded. Again, I like the brokerage industry. Check this out right here. If we go to the revenue, this is what I love about Webull is how growthy they are. The sales are up 46% year over year, but they are still struggling with net income positivity. They lost net income this quarter, but they made net income the past 2 quarters. So we're trying to see them start to normalize their net income, but they did just IPO, so we give them the benefit of the doubt. But basically, I know Webull as well just brought crypto back to the platform. So I think that's going to be a nice earnings tailwind. Yeah, dang, ALAB fell 19% today. They had some like partnership with ARM. I don't know. Let me actually go. The market closed. We haven't looked at the market since it closed. Yeah, here's our main portfolio. We are up 1.4%. We trended down a little bit at the end of the day there. Let's see here. Yeah, look at that. The Qs. Yeah, more tariff escalation. That's what explains that. Yeah. So let me actually check our Roth IRA real quickly. Our Roth IRA is negative on the day. Oh, well. Okay, so convince me to not sell on my Futu. Dude, I would never do that, dude. Futu's, this is like the better version. Like we're looking at Webull stock right now. This is the better version of Webull. So honestly, if you like Webull stock, look at Webull right here. So look, Webull is this brokerage right here, publicly traded. So if we look at this brokerage I'm on right now, this app I'm using right now, they are also publicly traded under ticker symbol FUTU. And here's why I would much rather buy FUTU over Webull stock, just because they're just as growthy. Look, the revenue's up 69%. They're actually more growthy than Webull. So revenue's up 69, but net income is up 111. The margins are insane. The net margin went from 38 to 48. I can't stress how amazing that is. For the net margin to go from 38 to 48 in just a year is insane. They're beating on every expectation. They beat on revenue. They beat on EPS, which is net income. They beat on EBITDA. Oh, actually, we don't get the EBITDA expectations. But anyway, these brokerages make a lot of money from interest income. Yeah, the interest income grew 43% year over year. If you look in the middle of my screen right now, I have $975 of cash. It earns me a 3.85% APY, and then they also make a little bit of APY on top of that. So, Glue is up since your review. Hey, Trey J, I saw that, dude. Glue is such a cool company. Yeah, so they have been momentuming up higher. So let's check this one out. They were up like 20%, I think, yesterday. So let's see. Is there any? Oh, there's comments. Let's see. Comments. Not really. Okay. So let's go look at their financials. I added this one to my watch list because their financials are actually very good. They impressed me, matter of fact. So if we go to the revenue, they just started making revenue. So that's why we don't get the year-over-year comps, because there's nothing to compare it to. But look, they did 84 million in revenue last quarter. Like, focus on last quarter specifically. 84 mil of revenue last quarter, and they did 46 million of net income on that. And that was, well, it wasn't it was about 40 million of net income, but still, that's insanely good. They also have a fortress balance sheet. Are they making interest on their cash? Is that why the operating profit is lower? Yeah, they're making 3 million of interest on their cash a quarter. That's interesting. Hey, 3 mil of interest a quarter. Anyway, I really like Glue. They're on my watch list. What's the market cap? Yeah, they're only worth 650. They're only trading at 27 times net income, and that's real. Actually, probably more like 30, but that's really good. Okay. Turned on the fan. All right. Why only 3K in the Roth? I know. I'm trying to deposit more into the Roth IRA for sure. Favorite rare earth mineral play? I don't really have one right now. Yeah. No. Maybe, probably just MP Materials, but that's such a boring answer. But MP Materials really does have like the best deal, but they're not a good deal as in terms of the stock price right now. India is trying to do semiconductors now. Australia is buying a ton of crypto farming. Oh, hey, look at that. What up, Anthony? He said options. No, I actually do not have any options at all. I mainly just buy and hold stocks for the long run. So yeah. Inspire me to start analyzing what apps do you use. Oh, hey, what up, Trade? I appreciate that. Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's a brokerage where you buy stocks on. And full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. Yeah, this is my favorite brokerage to like analyze stuff on. Hey, Carl, no way, dude. He said ABAT or ARM. You know what? I love ARM so much. They actually had a partnership with Astera Labs today. But you know who also loves ARM and owns some of ARM stock? If this will load right here. I can't wait to share with you what I know about ARM, because ARM is heavily on my watch list right now. I feel like I missed out. I'm getting FOMO on ARM. But I'm going to be patient with this one. I don't have any exposure yet, but I do want to buy this one eventually. But the valuation is too nuts. The valuation is still way too high on ARM. But check this out. A lot of people don't know, but ARM is really a royalty company. If we go to where the revenue comes from, 70% of all the revenue comes from their royalty revenue. And then the other part, the other 30, comes from their licensing business. So this is a high margin industry. They literally have 97% gross margins. That's what's insane about ARM. If you go to the net income, they're making a couple $100 million net income a quarter easy. So fortress balance sheet as well. I really like ARM, and they fell 2.2% of the day, but yeah. Astera Labs and Astera Labs joins ARM ecosystem to accelerate custom AI chip development. Yeah, the custom chips, the TPUs have been popular. Yeah, ARM partners with OpenAI and Broadcom for probably more TPUs. SoftBank to acquire ABB Robotics division. I don't know what that is. Anywho, let's keep going here. Braden says stocks are way more smarter to buy and hold long term. I agree, Braden, plus the tax benefits. Do you have any ideas why CAT jumped so much today? I think it's probably just following the momentum of yesterday's acquisition. If we go to Caterpillar right here, Caterpillar acquires RPM Global. So that came out yesterday, and they're really continuing the rally today. So I actually don't know. If it's not that news, then I don't know why. FCUUF. Oh, dang. So look, Fission Nuclear, you're right. It's just not available on this exchange. I can't view it, but that ticker symbol is right. I just can't view it on here. Are you scared that Futu? Hey, no, I'm not, Looney. Nah. Plus, I want to have a little bit of international diversification. Austin said Amazon, yeah, one of the best, like almost ETFs in one, pretty much, because of all the businesses that they own. I mean, Amazon is an e-commerce play. They're a UPS, an Instacart, a Walmart, an Oracle Cloud, all in one. Robotics play. subscription play, advertising play. Look at their like cloud business, their AWS, Amazon Web Services. This is the most valuable part of Amazon. It's over 100 billion of annual revenue for them, and it just hits a new record every year, every quarter. So that's their most highest margin business. They're expanding their net margins too. That's the real good story on Amazon. If we scroll out, used to be a tough buyback here, negative margins, single digit margins, but now they just slowly grow the margins to now double digits. So that's really helping out their bottom line. So, oh wait, we forgot to get to in-use stock. We'll look at Intel. What up, Hendray? Yeah, we'll get to Intel too. Let's get to that one. So, real quick, in-use stock though. Wonder if there's any news. Nope. This is a crypto bank out of Brazil, and in Brazil, people use crypto there for transactional purpose. It's not too popular in the U.S. because we have a good currency, but their currency down there sucks. So if we go to where the revenue comes from, 92% of it comes from Brazil, and I'm actually okay with that because that's the market you really want to be in. And I'm not just buying the stock or liking the stock for that. I like the stock because of their net income, their financials. I mean, they did they did it in halves. That's annoying. Anyway, but the net income's at a record. These year-over-year growth rates are phenomenal. So they're the most profitable they've ever been. What's their net margin? 17% net margins. Really good. So yeah, that's your crypto play, pseudo crypto play, crypto bank. So Intel right here, INTC. Intel right here, this company just got a 5% stake from NVIDIA and also a 10% stake from the US government. Basically, the US government can't allow Intel to go bankrupt anymore. It's crucial we have them because if you didn't know, NVIDIA just designs their chips. NVIDIA designs the chips. They're all actually manufactured by Taiwan Semiconductor in Taiwan. And with that's 6 feet away from China, we can't have that. So that's why I think the government really urged NVIDIA to take a stake in Intel, and NVIDIA had to play along. So NVIDIA is basically moving some of their older series production, like their CPUs and their GTX 1080 series, over to Intel here in the US. So pretty much this is not a zero anymore. The sentiment has completely changed ever since the government stake because they needed that. Because if it wasn't for the government stake and NVIDIA stake, this would be at zero. Again, if we still zoom out on this stock, Intel even today is lower than it was in 1999. You bought the stock in 1999. Even after this rally, you're still flat on your position. So it's because they literally just burned net income like a super unhealthy amount. They lost $17 billion that one quarter. Same with the FCF, which stands for free cash flow. They burned through billions a quarter, but this stake has really changed things. All right, so you think LAC is crashing tomorrow? Oh, Lithium Americas, I don't know. They could crash tomorrow, but there was just some more, it sounds like, escalating tariff stuff. China implements export controls on strategic materials and battery technology. So yeah, that's, again, speaking of the government taking stakes into Intel, they're also taking stakes into these rare earth mineral companies because it's also crucial these don't go bankrupt either, as for national security, just for our economy, So yeah, they have a lithium mine. They have a good balance sheet. Thoughts on buying Amazon before peak season? I'm always, if you have the intention like me to never sell Amazon, it's worth buying right now. There's also there's this news today. Amazon defies retail slowdown, and they're sticking with their 250,000 holiday hires. So Amazon seems confident going into the holiday season. They had a good Amazon Prime. It's no longer Amazon Prime Day. Did y'all notice that? It's like Amazon Prime Weekend or something. All right. Slide Insurance. Hey, what's the ticker symbol for that one? Can you do some good stocks that are cheap? Well, cheap is always relative, but some stocks that I think are somewhat at decent valuation, like the market's at all-time highs. It doesn't feel psychologically good to buy them at all-time highs. I've been saying Sprouts Farmers Market's a decent one. This is one I'm comfortable with buying on the dip, and I did buy it on the dip. I just didn't time it too well. So we're down 17% on them. Progressive Corp. Yo, should I go over Progressive? Actually, I'm going to go over Progressive Corp really quickly. This is one not financial advice that I'd recommend. And again, I'm not just recommending this stock because they're off all-time highs and it feels psychologically good to buy it because they're off all-time highs. I'm recommending this stock. Again, I don't recommend anything. This isn't financial advice, not personalized advice. But I recommend this one because of their good numbers. They have great financials and I can trust it. By the way, watch out for people impersonating me. I don't sell anything. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. But check this out. This is Progressive, the insurance company. You've probably seen Flo and the TV commercials, but check out how growthy they are. I mean, this is their annual revenue. It literally just hits a new record every year, every quarter. The law of large numbers is not stopping them. Revenue went from 40 billion to 50 billion to 61 billion. I mean, talk about the year-over-year growth rates. And they're not just making revenue. It's not just their sales down here that are growing, but their actual after-tax net income. It was up to 3.2 billion, a record. It's never been even close to, well, it's been close, but it's never been 3.2 billion before. Record net income, record net margin, record sales. I mean, everything here fundamentally is headed in the right direction. And another cool thing that rewards you as a shareholder is the fact that they do a yearly special dividend. So every quarter, you normally only get paid 10 cents, but every January you get paid a special dividend. It was $4.50 this January. Last January, it was 75 cents. And I think with this new record net income quarter, it's going to be even more. So pretty cool. All right, what app is this? Oh, hey, what up, Bogey? Yeah, hey, by the way, if you want to get this software I'm on, it's in the link tree in my bio, the very first link there. Yeah, full disclosure, it is an affiliate link, so if you deposit $100, we'll both get some free stocks. But yeah, it's a brokerage where you get stocks on. I love it. It's free, lowest fee brokerage. Like, that's why I like it, actually. You know, I wish I knew about that before I got Robinhood. Like with Robinhood over here, like to get the yield and stuff, you have to pay them. Where is it? Oh yeah, right here. You have to pay them $5 a month and you get a 3.75% APY. Well, this app right here, there is no monthly fees, there is no commissions, and you get a 3.85% APY, a little higher yield, and you don't have to pay anything. So that's why I keep my cash in here, because it earns interest. That's why a lot of people just like it for the interest. Yeah, but okay. Oh wait. ETN, this company might make good construction products. Is it a good stock? Yo, Eaton, that's like a huge Powell Industry competitor. Yo, we were just looking at, we had them compared up to them the other day. Let me actually pull this up for you. ETN and Powell Industries always move very similarly. They both do like switchgear solutions. Like as you can see, like right here, they both rallied up together and then they fell together. So these stocks rhyme together because they're basically in the same industry. Obviously, Powell Industries is the more growthy version, so that's why I chose Powell. But I literally have compared these two companies a lot of times. So let me actually check out Eaton. I've owned this one. Matter of fact, I've owned Eaton before. So let's check it out right here. If we go to the dividend, you get a nice yield, a 1% dividend. Yeah, hey, by the way, if you want to get this app I'm on, LA Mon, yeah, by the way, if you want to get this software, this brokerage I'm on, it's in the link tree in my bio, very first link there. But anyway, look at this right here. Eaton has a 1% dividend, and look, they raise their dividend every year, so that should beat inflation. But yeah, Electrical Americas, Electrical Global, and then they're also in the aerospace industry. So I like how diversified that they are. Check this out. Their aerospace revenue is up to a new record. If we go to the annual revenue here, also at a new record. So I like the growth there. So they're diversified into aerospace, which is a great industry. Also, it looks like I think they make vehicle engines or some sort of vehicle parts right here. That's 10% of the revenue. Oh, that's actually down 8% year over year. So maybe they'll spin it off or something. But yeah, they're making insane net income. And this is in USD. They're literally making almost exactly $1 billion of net income every quarter. So yeah. Do you think Webull is a good place to keep cash? I pay the subscription. Hey, what up, Logan? I actually have Webull. So yeah, Webull should be safe. Yeah. Again, all these brokerages are FDIC insured for $250K. So you're even if Webull goes bankrupt, you're good. Or if Moomoo goes bankrupt, you're good. And by the way, this app I'm on, or this brokerage right here, can you do options on this app? Yeah, you can. Actually, I'll show you that real quick. This app I'm on right here is publicly traded as well. So this brokerage I'm on right here, this is their stock right here. And it's good to see at least the brokerage that I'm keeping my assets on are making good net income. Like this, they made 330 mil of net income this quarter. I mean, just insane. And yeah, you can do options on here as well. They have so many different strategies you could pick from. I love anyone who does options. I'm just personally not good at it, so I just stay away from it. But the people who are good at it make a lot of money. Mainly asking because of the APY, which brokerage do you prefer holding cash? Yeah, hey, Logan, I prefer this one because with those, you have to pay money, like a monthly subscription. This one's free. There is no commissions. This is the lowest fee brokerage out there, in my opinion. So that's for all the free features. So yeah, if you want to get it, it's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure. Oh, by the way, all the apps I'm using, I have Webull also linked in the link tree in my bio. Also, Robinhood's linked up there. I just don't like them as much. Okay, let's get back to more stock analysis here. So I've owned ETN too. Oh, hey, nice, Prime. What about MULN? No way, not Mullen. Wait, they're delisted now. Yeah, I type in MULN, they're gone. Palantir, they just dropped a crazy military helmet with Meta technology built in. Wait, what do you mean? Do you mean like Meta, the stock technology? That's very cool. I'd love to see a picture of that. Someone said Palantir made crazy military helmets. Uh, let's check it out right here. So Palantir partners with OneMedNet for healthcare AI. Palantir, okay. Oh yeah, you're right. Like right there, Palantir secures $385 million contract from U.S. Veterans Affairs. Okay, let's just go to their numbers right here. Palantir is one of the most overvalued stocks out there. I mean, insane valuation. They literally traded 123 times sales. Not times profits, but 123 times revenue. But here's why Palantir deserves a high premium. I don't think they deserve this high of a premium, but they definitely deserve an insane premium. Because look at this. Half of the revenue, as we know, is from the government, the military, police stations. The government revenue contracts is up 49%. After it grew 23, after it grew 15. Like the growth rate is growing. That's insane. So it's at a new record on the government revenue. And also the commercial side with S&P 500 companies, that's up 46% after going 32, after going 11. The growth is just insane on Palantir, not just, revenue. They did exactly $1 billion of revenue. Out of that $1 billion of revenue, 330 million of it was after tax net income. They literally have no debt at all. That's an absolute fortress of a balance sheet. $6 billion of cash and no debt. So Palantir is a beast. How do you find your watch list stocks? Oh, hey, are companies that whenever I do this, the script like Palantir, I'd add them to the watch list because looking at their numbers, it's one I trust. I love their numbers. Jag said, what's the app? Yeah, hey, by the way, again, if you want to get this software, again, this is a brokerage. It's where you buy stocks on. If you want to get it, it's in the link tree in my bio, first link there. How much can you be leveraged on Moomoo? Well, hey, they actually, about 0.5, or I'm pretty sure you can do more. Like right now, I opened up a margin account. I always a fan of never taking out margin. Like don't take out debt to buy stocks. But some people say like, hey, I take out debt for 5%, but then I get a 10% return on it. So I keep the 5%. I get that, but I just not debt in a recession is rough. But anyway, yeah, if you look at the middle of my screen, it says excess liquidity 12K. I could buy. Anyway, just got my account from the, hey, Trey J, thanks so much. I'm gonna give you a follow. I appreciate that. So let's keep going here. Sursen said NAK. What is NAK? So Northern Dynasty Materials. So I'm guessing this is some materials, rare earth mineral play. Probably just following the momentum. I don't know if there's any specific news of like an actual, like a deal or anything happen with them. Northern Dynasty challenges EPA veto of Pebble project in Alaska. Maybe that might be, I did notice that the company tanked on this day with no earnings. There's no earnings or anything this day. Maybe it was the news that their project got rejected, but maybe it's actually getting approval again. I don't know the whole story there. If that was the story, then that would be a crazy assumption, but all right. Where do you get your energy from? Actually, I get my energy from Constellation Energy. That's who our nat gas bill is. But if you mean like energy, I get my energy from McDonald's. Someone said, what's your favorite dividend stock of all time and why? Yeah, call me crazy, but it's actually McDonald's just because of their safe, super recession-proof business model. Even in a recession, if you didn't know, McDonald's owns the land under 80% of all the stores. So even in a recession, they're still collecting rent from every tenant. And also, they are a royalty play. If you go spend $100 at any McDonald's, $4 of it goes back to the parent company as a royalty. And if we go back to 2008, the stock didn't dip. If you look at any other stock in 2008, major dip. But Walmart and McDonald's didn't. By the way, speaking of dividend stocks, if you like them, all these stocks I love and I trust because I own them. But all these companies pay a dividend, every single one of these. And here's our total percent change in every stock. So, let me get to SLDE. I want to get to SLDE. Then we'll try CNMD. We'll try and get to that one too. So here's Slide Insurance. Remind me to get to, I think we already looked at SNX today. We'll maybe look at them again. What up, Lucas and Iris Energy? Yeah, we just looked at Iris Energy as well. So Slide Insurance, let's go look at their numbers right here. They just IPO'd, so they haven't been public for too long, but that's all right. Let's go look at their numbers. Oh, they're making the good net income every quarter. Let's see. So that's good growth. Revenue's up 25, like all 4 of these quarters, that's really good sales growth and not just revenue growth, but net income. Like that's good. And 100 mil of net income last quarter, pretty much. No dividend, but that's very all right. What's the PE ratio? Insurance always trades at low. Yeah, they trade at 7.5 times PE, which is kind of normal for an insurance. So CNMD, what's this one? ConMed. Let's check it out. And then we'll pull up oh, Carlisle Group. Hey Looney, you mean Carlisle Group CSL or that Canadian company? Because I love CSL. Okay, here's ConMed. This is a $1.4 billion company. The stock is below its COVID dip. So the stock has been doing bad. Let's see if we can figure out why in the numbers. So general surgery. So a surgery company. So it looks like maybe the growth is slowing, mid single digits, 4% revenue growth, 3%. What about this other one? Orthopedic surgery. That's up 0.8 and 2.5. So yeah, the growth is kind of gone the past couple quarters. That might be why investors aren't too happy because look, that doesn't really beat inflation, 3%, 2%, 5, 4, 4. So it's just single digit revenue growth. I think we want to see a little bit more than that. And yikes. And this is real too. I was hoping it was a one-time adjustment, but it's not. The margins have collapsed over here. Oh man, the net margin, used to be, 6 to 15 and anyway, these year-over-year declines don't look good. I can kind of understand why that one's struggling. Looks like they pay a dividend too. So, I'm about to go all in on Apple puts before earnings. Apple puts. Oh, hey, good luck. I don't know if I'd buy puts on Apple, but that's interesting. Oh, I just dropped. Okay. What is that Simmons? Yeah, hey, one of our electrical boxes outside are Simmons brand. So hey, we got some other equipment. Let's see. So if you buy the stock even right now, you get a 2.23% dividend yield. 223. So smart infrastructure, digital industries, mobility. Anyway, let's go to net income. And this is a European company, but we've converted the currency from euros to USD. And check that out. I mean, easily, that's so good. 2.6 to 4 billion of net income a quarter. I mean, they're printing it. So maybe we could look at Apple too. I do really like Apple. My electric company only uses Siemens panels. Oh, hey, cool. Yeah, that stock has a nice yield. Oh, did someone say Eli Lilly? What app is this? Yeah, hey, flopping. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. Yeah, let's do Procter & Gamble. I saw two people say that one, and I haven't gotten to it. So here's Procter & Gamble. This is your consumer staple company. They own so many billion-dollar brands that you've heard of, like Old Spice, Gillette, Tide. I mean, just so many. Like, look how diversified that they are. Fabric and home care, baby, feminine, family care products, beauty products, healthcare products. So I love how diversified that they are, and they print net income easily, 4 to 4.5 billion of net income a quarter, and they share that with you via dividends. So you get a 2.7% dividend. These kind of stocks, this consumer staples, usually outperform when tech does bad. So it's almost like a way to hedge in this sort of environment. Almost like buying McDonald's or a Walmart or something. Walmart partnered with OpenAI today and rallied up. So BWXT, what up, Clem? Hope you're having a good Tuesday. BWXT. So BWX Technologies. Wow. Hey, congrats if you own this one because you got to be up on your position. I mean, easily new all-time high. Let's see what they do. So government operations. So it looks like the government's a big contractor for them. Yeah, that revenue is growing nicely. And then they have the commercial operations. They're kind of like a mini Palantir. This reminds me exactly of Palantir, where they have their main government operations and their commercial side. Commercial side was up 25. They've been beating on expectations nicely. Check that out. The orange lines, what the analysts expect. They expected 710. They reported 760. And they beat on net income and on EBITDA. That was a really good quarter. Triple beat. No wonder they're at all-time highs. Actually, they deserve it. They're profitable every quarter, beating on every metric. They deserve it. What are you invested in? I'm invested in a lot of different stocks. By the way, on my YouTube channel, I make a bunch of YouTube videos all the time doing stock portfolio updates. And also at the very beginning and very end of every stream, I do a stock. I'll do a portfolio update of all my holdings. So what was I saw a stock I wanted to get to. Where was it? There's so much. Oh, there's I want to get to Eli Lilly. Oh, there's Archer Aviation too. Let me cover this one. Okay, so Archer Aviation, here's why I would stay away from this one. And it's done great. First off, if you own this one, you're most likely up a lot on your position. Here's why I don't love the risk reward currently. That's because this is a speculation play. Like this is a startup. If we go to the revenue right now, it says no data because this company has never sold anything, not a product or a service. So you can't really apply a multiple to this company, and they're not really expected. Well, I guess on Q4 of this year, they're expecting 1 million of revenue, but I think it's tough to pay $8.4 billion market cap for a company with no revenue, losing 100 to 200 million of net income a quarter. So that's the one thing I'd warn about Archer. But again, all that bearish news I said, but the stock is still doing amazing just because of momentum and how the market is. So yeah, J&J had earnings report this morning. Really, I want to check that out actually. They are flat on the day. So that's actually great. With how good Johnson & Johnson has been doing lately, that's good news if they're flat. Let's see. Johnson & Johnson to spin off $9.2 billion orthopedics unit. Updates 2025 outlook. FDA adds safety warning to J&J's Anyway, let's go look. This is a great dividend play. Like you buy the stock even now, you get a 2.6% dividend. This is known as a dividend king, which means they've actually been raising their dividend for over 50 years and they've never had to cut it once. They never had to cut their dividend in 2008, didn't have to cut it during COVID. They just grow their dividend every year, but very slowly, but it's still good yield. And they also do tons of share buybacks as well. Net income's up. Well, that's a little adjusted, but anyway, if we really look at the operating profit, they're making easily 5 to 6 billion of after-tax net income a quarter. And yeah, they're a nice healthcare play. I also love AbbVie. ABBV is a great one. So, all right, let's do SNX right here. So, yeah, we already looked at this one not too long ago. Nothing really blew me away here. They're the same prices they were 5 years ago. But like on the 7-year chart, like they're only up like 10% or something. Or like from this peak right here. This was in 2018. They're not much higher than their 2018 price, but let's see here. Revenue is, yeah, so that's what I don't love. Like single digit growth. Revenue's up 6, 7, 3, 5. So I don't love that, but I do love that they're making net income every quarter. This is really good. I mean, easily 100 to 200 mil in net income a quarter. What's the multiple? Yeah, they're trading at 16 times net income. Again, they're probably trading at such a low multiple because the growth is really slow, but they're very reliable for that net income, easily 100 to 200 million a quarter, and you get a 1% growing dividend. Check that out. So it's kind of like there's good and bad news. I don't expect this to really outperform the S&P 500 in the long run, but they're profitable. They have a nice yield. They're probably doing share buybacks too. But I want to see kind of the growth come back. SLDP. Solid Power. What's this one? Solid Power. Oh, wow. Look at that momentum. I mean, they're up 10% on the day. Let's see what happened here. So, they've been beating on expectations like crazy. Look at that. The orange lines with the analysts expect. They've been beating on revenue every quarter. So maybe they're just going to grow faster than the analysts first thought. So if we go to their net income, they are losing, 15 to 25 million in net income a quarter. And whenever you lose net income, that money has to come from somewhere. So that's kind of why the assets are slowly declining, but they can easily afford these net income losses, unlike a lot of other companies, and probably in this similar situation where they really have no debt, no liability. So they can just afford to pay that off with their cash pile as their sales are growing rapidly over expectations. So that's probably why they're rallying up. Check out GAW. What's GAW? I type in, hey, what up, user 84? I type in GAW. I type it in. Unfortunately, I can't find that stock there. I can't find them on my exchange. One more, RELX. RELX PLC. So let's see. The stock is done great since 2019. Let's figure out what happened here. You get a dividend as well. Let's see. Dividend, you get a 2% dividend, a 1.92% dividend. Oh, we're going to convert the currency. So this is a UK or British company. We'll convert the currency from British pounds to USD. So looks like they're in risk. That only up 2% year over year. That's not great growth. Scientific, technical, that's down year over year. Legal is up 1. That's whoa. So this is just a slow growing. Well, it says for the first half of this year, it's up 10.9. But yeah, for the full year 2024 versus the full year 2023, the revenue only grew 1.52. That's what we were looking at there. But it looks like the growth is coming back now. Revenue's up 10.9, and they're making good net income, easily well, that's in halves. So they're making about like 750 mil of net income a quarter. What's their margins? 20% net margins. Nice. Anyway, hopefully that was helpful. I don't know where. So they're headquartered in UK. So what is this one? TCNNF. TCNNF. Oh, that's another one. I can't view it on this exchange. That's unfortunate. So Albertsons, yeah, this is the company that Kroger was trying to buy them, but then Albertsons like didn't follow through with the plan, messed up the regulatory stuff, and I think that there's still maybe a pending like litigation payout they have to give to Kroger, but that's no big deal. That's been priced in. But they're up 13% on the day. That's insane for a grocery store. Let's see. Oh, they reported earnings. Let's see what they were. So, well, investors must have liked it. Strong sales is what they said. Well, anyway, I don't know if that's what quarter was this? 2026 Q2. Oh yeah, so this is the actual quarter right here. So they did 168 million of net income. Revenue grew 1.96. So revenue grew 1.96, but investors still loved it. So maybe they gave good guidance or something. Net income is up by 15, but net income per share is up by 20. Thanks to the share buybacks. And you get a 2.8% yield. That's crazy. So you've gotten near 3% dividends, 3% share buybacks. Crazy. Suda said, what platform is this? Yeah, hey, by the way, if you want to get this brokerage, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, first link there. It also is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. Someone said this interest rate thing. Yeah, here, I'll show you that. So yeah, you can see the interest rate cut probabilities on here too. So on the October 29th meeting, there's a 95% chance of a 25 basis point cut. Then on December 10th meeting, a 94% chance of another 50 basis point cut. So there's a clear rate cut probability path right now, which is pretty cool. Oh yeah, and you can see the institutional trackers. You can see what ARK and Berkshire Hathaway's doing and all these other institutions. And oh yeah, and all the investments. So you can, like, if you're looking for new stocks, they have a bunch of different, like, basically sectors you can find, like I don't know, robotics companies that we saw. Symbiotic is a very cool one, or if you're looking for the monkeypox beneficiaries, or I don't know. Anyway, let's keep going here. Roku stock. Actually, Surzan, what up? You know who actually owns Roku? That would actually be the girl Kathy Wood. If we go to her portfolio right here, 4.65% of her portfolio is in Roku stock. And this is a company, a TV advertising company that partnered with Amazon, actually. So Roku has a huge partnership with Amazon. Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, first link there. But yeah, Roku, they basically sell you a TV for break even. They sell you a TV for break even, but then they make money off the software after. They have a nice ARPU, which stands for average revenue per user. They literally make, we can see their active accounts and average revenue per user. They have 89.8 million active accounts, and their average revenue per user is $41.49, up from 39. So their ARPU is growing. Their active accounts grew by 9 million year over year. That's why I think analysts are happy with this name right now. And they're just now getting net income positive. It was a tough buyback a while ago. They used to lose a couple $100 million, but now they're actually getting super close to net income positivity and even made net income this quarter. They also have a good balance sheet. They deleveraged it slightly. So this is now an interesting advertising company. They partnered with Amazon. They're kind of like I almost like them more than the Trade Desk right now, the TTD. New subscriber here. Hope you're doing well. Hey, yes, Has. Thank you so much, man. I really appreciate that. Yo, if you got a stock you want me to look at, let me know. Hey, Kudo, what up, dude? He said ticker symbol C8 in stock. So let's check this one out right here. Canaan. They're up 18% on the day. What's the market cap? So they're only worth $840 million. But that's not the end of the world. They're up 18% on the day. Let's see here. So there must have been some sort of good news, or maybe just momentum. Stocks after $19 billion crypto. Well, what is this? Where's the revenue come from? So only 26% of the revenue comes from the US. Then the next biggest is China, then the UAE, Ethiopia. Wow, 12% of the sales are from Ethiopia. Okay, let's just go to revenue down here. So the revenue grew nicely. The revenue is up 39%. Yeah, hey, this is Moomoo right here. Oh yeah, hey, by the way, if you want, yeah, sorry. Yeah, I'm on a brokerage here called Moomoo. If you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. But yeah, I love this app. Free brokerage, no fees. But yeah, check this out. They are still losing a bit of net income and not a healthy amount either. Like they lost 11 million, but last quarter they lost 86 million, then 92 million, then 75 million. So we do want to see those losses start to narrow. Because remember, when you lose 80 million and your whole company is worth 840 million, that's 10% of the entire company. But that doesn't matter because the momentum has been insane. I think this is somewhat crypto related. Again, I don't know, and I wish I knew, but congrats if you own that one before today, but I don't know if I trust them now. Yeah, we do have some interesting earnings this week. Let me actually go check my watch list. If we go to the earnings hub right here, or actually the earnings calendar, I can actually filter by my watch list. Let's see, anything important? Oh, Progressive is tomorrow. No way. So Progressive and ASML are tomorrow. Then Thursday's Taiwan Semi. Friday, nothing really. Anyway, that Progressive should be interesting. I do own some of them. ASML report earnings tomorrow. Oh yeah, ASML should be really fun. I bought a few today. VTI, VTV. What's a VTV? Well, I love all those other names. I don't love Merck actually. Out of all those, the only one I wouldn't get is Merck, but all the other ones are phenomenal. I love FTNT. Yeah, this is the Vanguard Value ETF. Let's see what it owns. So it owns JP Morgan, Burke, Exxon, Walmart, Johnson Johnson. This looks like a Dow 30. Yeah, AbbVie, Procter & Gamble. It's actually not a bad ETF. You get a nice yield too. Nice. UMAC has good growth. UMAC, Unusual Machines. I think this is a actually I don't is this a space company? Let me actually go double check. Okay, drone concept stocks. This is a drone concept company. Let's see. Revenue. Let's hope they have revenue. Well, they do have revenue. They did 2 million of revenue. Uh yeah, hey Suda, I'm on Moomoo right now. Yep. So the revenue is up to 2 million. Obviously, they're losing net income on that, but they just fortified their balance sheet. That must have been from issuing shares. Yep. They issued 36 million of shares, and that explains how the assets literally went up by 36 million. That's funny. What's the expectation? So the revenue was 2 million this quarter. They're expecting 4 million in 2 quarters. Anyway, I just be very careful with this one just because they're such a small company, 460 million. But again, they're worth 460 million because the sales are 2 million. So anyway, yeah, you want to see some real growth there. They're really still like a startup because they don't have much. Someone said Nike stock. I don't love Nike just because. Yeah, actually, I used to own Nike. I used to be a Nike bull. I love the brand, but I have a collection. But I sold all my Nike stock because I couldn't be emotional. The numbers are bad over here, and I don't think I could make much money with them, so I sold them. So here's their numbers right here. And this isn't like some one-time adjustment either. This is kind of sad. The revenue's up 1%, but that's after it fell 11. But remember, the revenue is up by 1. So revenue's up by 1, but the net income is down by 31. That's not some one-time adjustment either. The net income really did fall that much. So I don't love the fact that what that means in English is that the margins are collapsing. The net margin was only a 1.9%. So look at this. They made 727 million in net income this quarter. So remember that. They made 727 million, but the dividend literally cost 600 million or 591 million. So it cost 600 mil a quarter. So they were just barely able to afford the dividend, and they weren't able to afford it last quarter. So I think the dividend payout ratio is a little high. They're just in a hole right now. And it's a hard double. Like it's hard to double your money on Nike. And they can't double their revenue like a software name can. So anyway, I just don't expect them to outperform the S&P 500. EXE stock? What is EXE? Is that Exelon? Or no, this is Expand Energy. Okay, let's check it out. So the stock's done pretty good. They IPO'd about a year ago and they pay a dividend too. So yeah, you get a 2.27% dividend yield. They're a natural gas play. Okay, so Natural gas has been doing a little decent recently. So 67% of all the revenue is natural gas. Let's see revenue down here. Whoa, it is up 630%. It went from 505 mil to 3.7 billion. And so this wasn't some one-time adjustment. Like they normally lose net income every quarter, but this was real. They really did do this. They literally made $1 billion of net income this quarter. So as long as they can keep that up, I mean, that's super impressive. And I guess they're expecting them to stay net income positive the next few quarters. So anyway, there's a natural gas play. I think tomorrow will be red. Hey, what up, Fuzz? Yeah, Tempest AI. Yeah, Tempest AI. That's another one of your like. They're the genomics company. Let's see. So yeah, here's Tempest AI. They're down 5% on the day. You know, Nancy Pelosi and her husband both own this one. You know, genomics, think like gene splitting, gene editing. And this is actually one of the better ones because they have real revenue and real growth behind them. Like I've looked at CRISPR Therapeutics and like RXRX. Those aren't great. They're actually bad, but this one's good. I love this. The revenue's up 115% year over year. That's insane. The growth, part of that is from an acquisition, but they also have their data and services business, which also is growing very nicely, up 35% after going 32. So both businesses are growing very nicely. And yeah, if we go to their assets right here, look at their balance sheet. The assets rallied up. It also deleveraged them while doing this, so it double helped them. But their assets went up a bunch because if you go to their cash from investing activities, they just bought a company for basically $500 million. So anyway, Tempest AI is cool. Which app is this? Yo, hey, what up, Akash? Yeah, hey, if you're on the YouTube stream, if you want to get this app, it's in the link in the description, or it's in the link in the description if you're on the YouTube stream. If you're on my TikTok stream and you want to get this brokerage I'm on, it's in the link tree in my bio. The first link there. By the way, this is a brokerage. It's a software where you buy stocks on. It'll ask you for a bunch of information and stuff. But anyway, and it's an affiliate link too, full disclosure. So we'll both get some free stocks. But someone said Verizon, VZ. You know, Verizon, this is one. What up, Troy? You really buy this? Oh, Stag Industrial. That's like a warehouse REIT. Yo, we'll try and get to that one. We have Verizon right here. This is your play to maximize your dividend income. You know, if we go to the stock back in 1997, you know, Verizon is the same price that it was in 1997. So you're not buying this to outperform the market in the long run. You know, you're mainly buying this, again, to maximize your income because I do have a safe. This is safe too, a 6.7% dividend yield. So yeah, you're buying it for that reason and pretty much that reason only. Cost said, what do you think of Broadcom? I love Broadcom right here. They also just had like a TPU deal, I think, with OpenAI. Basically, the TPUs are just like chips that you can custom build on top of. So yeah, Broadcom and OpenAI form strategic partnership for custom chip development, unveils Thor Ultra 800 AI network chip. Anyway, Broadcom, a lot of people know them for their semiconductor solutions because that's 57% of the revenue. But the main growthy part about Broadcom recently has actually been their infrastructure software. I mean, if we like look at it on an annual basis, 2023 it was 7.6. Now it's 21. I mean, the growth recently has been insane on Broadcom's infrastructure solutions. So that's what I love about them. And they're not just growing top line, but bottom line. You know, if you go to the FCF, which stands for free cash flow, they're easily making $6 to $7 billion of free cash flow a quarter. It's up 46%. Also net income too, nearly $5 billion net income. So Broadcom's a great one. They're overvalued though. How do I find the software? Oh, yeah. Hey, Claudia. Good. Yeah, by the way, if you want to get the software I'm on, it's where you buy stocks on. It's in the link tree in my bio, the very first link there, if you want to get it. All right. What price would you buy Hood again? Probably like $100. Yeah. Just because I'm up so much on them. So Stag Industrial right here. This is your warehouse. Oh, wait, Stag. This is your warehouse REIT. It's a real estate investment trust. And you're basically buying this to maximize your income because you actually get a 4% dividend and they pay you monthly. So that's one of the unique things about this stock you don't see often. You actually get paid a monthly dividend, and the dividend is safe because, again, they're a REIT. They literally have to pay out 90% of the taxable income in the form of a dividend by law. So, yeah, that's what's cool about them. ETON, please. Let's do it. ETON. What do you think of Oklo? Why does it keep rising? Yeah, Oklo's a dog. It's terrible. You know, actually, I'll go back to that stock right there. Moomoo right now, this app I'm on right now has like this challenge right now. It's a 200K paper trading challenge. Basically, they do this once a year where basically whoever has like the best performing portfolio gets like a little bit of free money or something. But anyway, I decided to put my entire I decided to put my entire paper trading portfolio on Oklo puts. So we're down on it because the stock rallied today, but we bought it all on Oklo puts. So let's hope that goes well over the next month just for fun. But anyway, yeah, that's what's cool about this app. Okay, wait, let me get to ETON right here. Then we'll get to SoFi. I love SoFi. I'm from India. TikTok is banned here. That's not good. Hey, thanks for showing up to the YouTube stream. Yeah, by the way, I'm streaming on YouTube and TikTok. Best way to support me is just watch the stream from YouTube. Okay, so here's Eton Pharmaceutical. They have been on an insane rally the past couple months here, from $3 to $18, and even though they're at like this new all-time high level, they're only worth $503 million. Let's see if that's justified. So they're worth 500 mil. The growth is really good, 100%, 60, 50. So the growth has been insane. The assets are growing every quarter. We do want to see them start to make more consistent net income, but the losses are very little. I mean, 1 to 2 mil. I mean, that's nothing. They can afford those losses. What are the EPS estimates? Yeah, look at the EPS estimates. They're expected to go net income positive for the next 2 quarters and potentially just for the rest of time. Your revenue is expected to keep on climbing higher. So honestly, they, even right now, it might honestly be worth $503 million if they're going to be making like $5 million a year next year or plus, and then it's going to, so they're interesting. I'd be, again, $500 million company, extremely small market cap, but I wouldn't keep it as a huge size position, but they're interesting. Do you think more red across the market is coming tomorrow? Maybe, I don't know. Meta stock. Yo, Meta is a great Mag 7 never sell right here. Let's check it out then. ABAT took off since I mentioned it last. Oh, hey, nice there, L. Heck yeah, we'll check them out too. I think that's that American battery technology company. So, and we got to look at SoFi too. I forgot to look at SoFi. We'll get to SoFi after this. But yeah, here's Meta right here. Meta is an absolute beast of a company. What is that at the top here? It said Meta and Oracle to use NVIDIA. Oh, come on now. Wi-Fi. Please work. All right, I guess I'm not going to view it then. I might have to reset this app real quick. Well, we just won't view it. I don't care anymore. Okay, Meta is a great company to buy and never sell. If we go to their active users, they literally have 3.48 billion daily active users. So pretty much half the world is on one of their apps once a day. And check out the net income they make. I mean, this is impressive. They're easily making 18 to 20 bill of net income a quarter, and it grows. I mean, this is a $2 trillion company with a 40% net margin. I mean, has anyone seen the new Meta Ray-Bans, the Meta Oakley Ray-Bans that has like the display on them? They're losing on the LLM AI, but I like their new glasses. They also just acquired Scale AI for $15 billion. So Meta's a beast of a company. I do own them, full disclosure. If I head over to my Robinhood portfolio, I think that was their only stock down on the day. Yeah, look at that. Only Meta was down on the day. But yeah, we're up 34% on them. The great never sell company. They're in my portfolio. So, hey, what up, Seuss? Good to see you. So I wanted to get to SoFi too. Also, I own SoFi. I could pull that up too. So over here, we got 24, one of the stocks I regret every share I've ever sold a SoFi on. But yeah, I bought this stock. It was right here. Yeah, right before earnings is when I bought all my SoFi shares. And I've kind of just been diamond handing ever since, my couple of shares left. But here's why SoFi isn't just propped up on momentum right now. They're doing good because of their good growing fundamentals. In my opinion, they deserve to be doing this well. Check this out. If we go to where the revenue comes from, this is a fintech. 42% of all the revenue comes from their financial services. And check out the growth. I mean, the revenue's up 105, after it grew 80, after it grew 222, after it grew 260. So that business is, and like no one expected that, not even the analyst. Hey, Jello and Hill. Thanks for the roses there. I really do appreciate that. I even see that. Thanks so much. But yeah, look, we can see they're beating on every expectation. Every quarter they beat on the revenue. Every quarter they beat on net income. And every quarter they beat on EBITDA. So no wonder people are taking SoFi serious. They did 850 mil of revenue. Out of the 850 mil of revenue, 97 million of it was after tax net income. So very profitable company. So ABAT, American Battery Tech, let's check it out. Whoa, up 22% on the day. There must have been some great news. What's most easier app to use in buy and hold setup? Yeah, hey user, I like this one right here. Moomoo, it's in the link tree in my bio, the very first link there. What is EBITDA measure? Yeah, EBITDA is just the earnings, the revenue before interest, deductibles, all that depreciation and amortization is what I meant to say. But anyway, ABAT right here. Um, I don't love looking at the EBITDA. I love the net income number because that's what you really want to look at. But anyway, check this out right here. ABAT. Let's see if there's any news right here. After completing land studies, ABAT hit new 52-week high after completing land studies. So I'm guessing whatever results came from these studies were good. That's good. Looks like they have a really good balance sheet, so no bankruptcy risk. Revenue just spiked up from 200,000 to 2 million. So maybe they're finally going to make some revenue, which is good. Maybe another US mineral play. I wish I could give you more thoughts on that. Someone said, what platform using? Yeah, hey, by the way, if you want to get this app I'm on, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. So let's check out EOSE stock. EOS Energy. So yeah, look at the momentum on this one. It's been insane. I think it's just because of the future growth expectations. Was that the, here's my hunch on why this one is momentuming up so much higher. It's pricing in the future growth coming from the next 2 quarters. Check this out. It was 15 million in revenue this quarter, but next quarter they expect 39 million. Then the quarter after, 81 million. So that's my hunch on why they're rallying up. Someone said, should I buy SoFi right now or is it too late? Yeah, it's too late to buy SoFi. The valuation is still way too ridiculous at 88 times next year's net income. Not this year's, but next year's net income. They'll probably beat on that, and it's probably like 60x. But again, I'd add SoFi to the watch list. I wouldn't buy them today. Coke stock. Hey, are you talking about KO or Coca-Cola Consolidated? Because Coca-Cola Consolidated did very well today, but this isn't the normal Coca-Cola stock that Buffett owns. You actually here, you know what? We go over here, another cool thing about this brokerage I'm on, you can see all the super investors like Nancy Pelosi, these super investors have to make all their trades public by SEC law. Oh yeah, and you can like batch trade, follow them into their trades if you wanted to. But if we go to the Warren Buffett portfolio, we can see all of his top stocks by allocation. One of the stocks he owns is Coca-Cola, and one of his best dividend plays. Check this out. Here's what's so cool about this stock. If you go to the dividend, you get a 2.95% dividend. So you basically get a 3% dividend yield, and then you usually get around like 3% stock price appreciation. Again, I don't expect Coca-Cola to really outperform the tech-heavy S&P 500, but it's a nice diversification. Like you get 3% dividends, maybe 3% stock price appreciation, 1% share buybacks. So Coca-Cola is good. They sell the syrups, and look at that. Yeah, they make 2 to 4 billion of net income a quarter. I like Coca-Cola stock, both of them. I own the bottling company, the bottler. So hey, thanks again for all the roses there. No way. I really appreciate that. If you got another stock you want me to look at, let me know. What do you think of Larry Fink's talk on CNBC? I actually did not watch that. I've been busy today. So many stocks are overvalued and they just keep going up. It's crazy. Exactly, Hill. Exactly. There's no catalyst really to stop the market right now from just continuing to climb higher. Someone said donut stock. Yeah, unfortunately, donut has bankruptcy risk now, which is crazy to say. They're even selling off assets, but Krispy Kreme, look at that. Did you know Krispy Kreme is only worth $600 million? So remember that. The company's worth $600 million, and literally just this quarter, they lost $440 million in net income. And that really happened. Notice the assets shrunk by that. So they're in a rough spot. And look, they lost all that net income, and the sales are super negative. The lifeblood of the company, the revenue is down 13. So it's rough. Ed has said what app you're using. Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. Oklo stock. Yeah, hey, Oklo. This one is one of the worst, like most bubbly stocks I've seen. And I have, it's not in my paper folio, I have a put on Oklo. It's not with real money, but I probably shouldn't even mention that because it doesn't matter because it's not with money. But anyway, here's Oklo right here. This is a stock that is extremely, extremely bubbly. If you look in the top right, the market cap, they're worth 25 billion. So think about that. The whole entire company is worth 25 billion. And this is a startup. If we go to the revenue right here, it says no data because they've never sold anything. They never sold a product or a service. So that's why I think it's hard to trust that $25 billion market cap. But they're trying to make these small modular nuclear reactors. And there's only 3 working SMRs in the world. And none of them are in the US. So that's a huge hopium proof of concept, like basically startup play. If you want exposure to real nuclear, like if you're like, I love the nuclear industry and I want exposure to it, the very best way to get exposure, like if you're going to buy Oklo at all-time high, you'd be way better off, in my opinion, buying this one at all-time highs. And I do own this company, but this company right here, Constellation Energy, literally owns 30% of all the U.S. nuclear reactors. It's the largest pure play. There's no one even like close. There's no close second. So pretty cool. And they're acquiring Calpine. Hey, no problem. Hey, by the way, if y'all want to hit the follow button, we stream every day. We just look at stocks. And by the way, I don't sell anything. I have no course book, WhatsApp, Telegram. I'll never follow you, DM you. When you want to buy a stock, what do you look at the chart as well on the analysis? Yeah, I don't really do much technical analysis. Yeah. Yeah. I mainly just look at the fundamentals because the financials outshine in the long run. Batteries are the future. Hey, yeah. Let's see. Brian said Celsius stock. Let's see. Celsius, what's cool about this one is how much they're going to get helped out by Pepsi. So one of the reasons the stock has been rallying up so much recently is because Pepsi took a 7% stake into this company, and they're really going to help out their distribution and manufacturing of their products like Alani. Celsius owns Alani. Oh, and also with that Pepsi acquisition, Pepsi stake, Pepsi is giving Celsius Rockstar Energy, Rockstar beverage. It's like a energy drink. But if you look at the most recent quarter, look at the balance sheet. The assets went from 1.8 to 3.8. How did the assets go up so much? That was from the Alani acquisition. So they just bought Alani last quarter, and that explains why the growth has been so monster. It explains why the revenue is up 83%. The net income's $100 million this quarter, and there's going to be even more future growth whenever they get that Rockstar beverage. And they're going to get helped out with margins are going to get better with the Pepsi distribution help. So anyway, I like the future. Looks pretty good on that one. What did you buy? Well, I haven't bought anything today, but one stock I have been slowly buying is, and I'm being super careful with this one, especially in this market right now. But I bought from Ferrari, ticker symbol RACE. Pretty cool. QUBT I just bought yesterday. Hey, Saucy. This is, in my opinion, one of the worst quantum plays out there. You're buying this for the momentum. In my opinion, you're buying this. You need to have a plan to get out of this name, but just know, I don't think you know what you're buying here. So check this out. If you look at the top right, they're worth $4.88 billion. So that's what the whole company's worth. That's the market cap. This company's worth $4.88 billion. I feel like I've been around. I know what a $4.88 billion company should look like. And a $4.88 billion company should not have this low revenue. The revenue was $60,000. And the revenue fell 66%. The revenue last quarter was $39,000, $62,000. I mean, the future hopium is like you're paying for so much future growth that's uncertain here. It's worse on a lot. It's worse on a lot of names too, like Oklo. There's no good quantum names at good valuations. They're all ridiculously overvalued. One of the better ones, probably the best one, is probably IONQ, just because they've been buying and acquiring a bunch of different businesses. Like IONQ just acquired Vector Atomic. What I love is they actually so this company, if you look at the top right, they're a $25 billion company. They're in the same situation as QUBT where they have no sales. So this is a revenue-less company worth $25 billion. So what do? They did something smart. They decided to dilute the shareholder by $1 billion. So they rose $1 billion of cash, and then they bought a company for $1 billion. So they actually have an asset now. What happens is, hey, Jinhee, what up, dude? Yeah, hey, by the way, if you want to get the software I'm on, it's in the link tree in my bio, the very first link there. By the way, it's an affiliate link where if you deposit $100, we'll both get some free stocks, full disclosure. Can we do Salesforce? Oh, yeah, Salesforce. All right, so Salesforce, this is one of the names that have been getting hurt by the AI thesis. So, they're saying in 10 years from now, will we need Salesforce? Their agent force kind of is like a ChatGPT wrapper, nothing too crazy. But I love some other. I love first off, I love Slack. Amazon uses Slack for their employees. I mean, they have some great CRM stuff, but they really get hurt in a white collar job decline. But okay, here's this. I love how diversified they are. They're in services, sales, platform and other, integration, analytics, marketing, commerce. I love that. I love the net income. They're easily making 1.7 to 1.9 billion in net income a quarter. Good balance sheet. And you get a dividend too. A 0.7% dividend yield. I know they do a little bit of share buybacks too. So, yeah, there's Salesforce. Also, Salesforce is acquiring ticker symbol INFA to bring back some more growth. So if you're wondering, if you're looking at a stock and it looks really flat like this, that's because they're being acquired. And so all this revenue now, if we go down here to the revenue, this 400 million in revenue a quarter is now all added to Salesforce. What's this platform called? Yeah, hey, by the way, Brick, if you want to, this is a brokerage right here where you buy stocks on. So I'll ask you for like all your tax and all that information. So by the way, if you want to get it, it's in the link tree in my bio. It's link tree in my bio, first link there. You can also just type it into Google, just a broker called Moomoo. So yeah. Okta stock. Yo, at my, and by the way, I'm not an expert. I'm just a college student, but on our college software, like application in the bottom right, it says Okta in big letters. So, hey, I'm sure, I used their software, I guess, but they look like a DocuSign. They look like a PayPal, a Roku, where they peaked in 2021 and it's just been down bad ever since. But that's the weird thing because the numbers are actually good. The numbers are like, honestly, they're the most justifiable buy they've ever been because they're now making good, consistent net income. If we zoom out on their net income, they used to lose a couple $100 million a quarter, but now they're actually making consistent net income every quarter. No net debt, really good balance sheet, deleveraging, beating on analyst expectations. The orange lines with the analysts expect. Every quarter they beat on revenue. Every quarter they beat on EPS by like nearly double, and on EBITDA. Like that's the weird part. They beat on every metric every quarter by a huge margin. The stock just struggles. I wonder, do they have a moat? What's the issue here? You know what? Let me actually go check that. What does Morningstar Research say about the moat? What app is this, bro? Yeah, hey, by the I need to pin a comment or something. Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. It's a brokerage where you buy stocks on. But let's see here. Valuation, economic moat, none. So they say they have no moat. I don't know. Valuation? Okay, Okta, they're interesting. I was getting interested in power grid stocks like your Powell. Specifically ENS. Let's check out ENS stock. They kind of remind me of like an ETN. ETN is a nice like energy electrical infrastructure play. They make like the switchgear solutions for the huge power loads at utilities and data centers. But here's ENERSYS, Enersys. So they're at, is that an all-time high on them? Congrats if you own this one. You got to be up on your position. Hey, we'll look at UAMY after this. Yeah, that one I heard is real popular, or they've been just momentuming up higher. So yeah, if we go to Enersys, their energy systems, how's that doing? Probably good. Yo, Wi-Fi, come on. So revenue is up by only 4.7. That's not great growth, only 4.7, but the stock is doing amazing nonetheless, so investors are still pleased. Yeah, so look at this. Even though the revenue is only up 4.7, that was still a big beat on what the analysts expected. Analysts were expecting 848. They reported 893, a big beat. So, and on, what did they beat on net income too? No, they slightly missed on net income, but still they're net income positive, making, 80 to 100 mil a quarter. Another stock I think you'll like, Josh, maybe add this one to the watch list, is PSIX, Power Solutions. This is another kind of, it's tough buying it now, but they're only worth, what's the PE? Look at the forward PE. They're trading at 20 times forward PE. So they're trading at 20 times forward PE, and check out how growthy they are. The revenue's up 73%, and the net income's up to 50. They're making net income every quarter. PSIX is another cool one. All right. Let's see here. Steven, or let's do Reddit real quick. Yeah, let's do Reddit stock. So I do own Reddit, full disclosure. Actually, I'll show you that real quick. They've been one of my better performers. We're up 100. Actually, they've struggled the past couple weeks here, but we're still up 100% on Reddit, which is cool. And this company is like, they deserve to be doing this well. one reason why their stock is falling is because I remember there was this was the exact number. On OpenAI ChatGPT, their mentions of Reddit articles went from like 20% to like 4. So the mention of Reddit articles in OpenAI ChatGPT responses plummeted or whatever. And that's why the stock fell. I don't know. Anyway, I still love this stock and I'm not selling. I'm not trimming at all. If we judge Reddit off their numbers and financials, they deserve to be doing very well because look at this. Every quarter, they beat like crazy on every expectation. They beat by double on EPS, which is net income. They beat like by more than double on EBITDA. They beat by triple on EBITDA. I mean, it was a gangbuster quarter. Honestly, they're starting to get to like reasonable nibble territory where it's like you can actually buy them at like 180. So check this out. Revenue super growthy. Revenue's up 77. After it grew 53. Also, they have no debt, like amazing balance sheet, no debt at all, 2 billion plus of cash, making net income every quarter. Again, they beat by over double on the net income expectations, and not just net income, but also FCF, which is free cash flow. Their ARPU, their average revenue per user, is up 48% from the previous year. So yeah. All right. We'll look at a few more here. Then I gotta go. Details, she said AMPX. What's that one? AMPX. Oh yeah, Ampress Technology. This one we did add to the watch list. Check that out. They've done amazing the past couple months here. So congrats if you own this one. What's their market cap? They're a $1.6 billion company. Oh, they're a battery. It says battery segment. So it looks like they sell batteries. Wow. Look at that growth. So if we go to sales down here, revenue, check that out. You know, the revenue went from 3.3 to 15. So the revenue growth has been insane. And what are the expectations? So yeah, they did 15 mil of revenue this quarter, a huge beat. And the analysts are expecting the revenue to just continue to climb higher and higher. You know, maybe they're going to be doing over 100 million of revenue a year. I mean, that's probably realistic. So nice. NWTG, wait, NWTG, DNA, or maybe we'll get to that one. Oh wait, UAMY. I wanted to get to that one. Wait, I'm typing in the ticker wrong. All right, if this doesn't load, then we'll switch it. Okay, NWTG. All right then. Guess we'll reset that. All right, NWTG. It's probably just our internet because we're terrible. There we go. Newton Golf. Okay, we found it. All right. By the way, we're about to end the stream here. By the way, if you want to hit the follow button, we stream every day. So this is our second stream of the day. I sell nothing. I have no course, book, WhatsApp. But yeah, we're not actually going to talk about this company. If you look in the very top right, they're only worth $8.5 million. They're only worth $8.5 million, and they're at all-time lows. So, oh yeah, UAMY, let's do it. So UAMY, RVPH, and hey, we'll try and get to RVPH. We might not, I don't know. Well, we'll probably only look at one or two more here. But this is, we'll get to it. We'll try. So this is a $2.4 billion company. Yeah, look at that insane rally that they've had. I wonder if there's any like news. Let me go to the news tab right here. U.S. critical. Oh yeah, JP Morgan's committing lending money toward rare earth mineral infrastructure. So I think this is just another rare earth mineral play. I think they're in like limestone, or not limestone. It was some niche. Yeah, here it is, zeolite. They're in zeolite and antimony. So I think it's just another rare earth mineral play. I don't know. The revenue growth has been nice, but what app is this? Yeah, hey, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Yeah, it's where you, yeah. What was the other one? RVPH. Let's do it. RVPH. Wait, RVPH. Okay, Reviva Pharmaceuticals. So, yeah, we don't really cover these kind of stocks. If you look in the top right, they're only worth $56 million. So, $50 million market cap. It's a startup. It's a $50 million company that does no revenue. So, if we go to the sales, it says no data because they've never sold anything, not a product or a service. The liabilities are higher than the assets. They lose a bunch of net income. I mean, I can totally see why this one's, done so terrible. No sales, burning through net income. worth 50. They're worth 50 million and they lose well over 10 million a quarter. It's rough. There's real bankruptcy risk there. DNA, please. I think that's another like star. Yeah, let's hope they have sales. So $800 million company. They do have revenue. Okay, that's good news. All right, great. So let's see. Ooh, but the revenue is down 11% after it fell 30%. Oh, yikes, those losses. Wait a minute. So think about this. Think about this logically here. Just know what you're buying. If you buy this stock, just know this. The whole company is worth 834 million. So the whole company is worth 834 million. They lost 60 million this quarter, 90 million last quarter, 100 million the last quarter, 60 million the last. That's rough when you're worth 800 million. So yeah, there might be bankruptcy risk there. I wouldn't trust too much money with that one. Ito said IoT Samsara. Yeah, this is a $21 billion company. Let's go see what they do. I think there might be a semi play, or what industry are they in? Software infrastructure combines plug and play sensors, wireless connectivity, cloud hosting. All right, well, let's see. Revenue is up 30% after it grew 36, after it grew 43. So revenue is growing nicely. And so they're still not making money yet, but they're super close. I mean, they've narrowed the losses. They only lost 16 mil in net income this quarter. So yeah, as long as they can continue this growth and get net income positive, things should look great. Let's see. They're not expecting them to make net income, but that's it. AHT, Ashford Hospitality Trust. Yeah, hey, another. I wish I could, but we don't really cover these. Again, the whole company, if you look in the top right, they're only worth $30 million. I mean, who's trusting their money in this kind of stuff? I mean, this is junk right here. $30 million company. So look, I mean, the whole company is worth 30 million and they lost 32 million in net income this quarter, 22 million last quarter, 100 million, and they have more liabilities than they have assets. And the revenues declined 5% year over year. No wonder this is at all-time lows. That's the kind of stock that's going to continue lower and lower, I think. So, hey, he's probably not going to give me a follow anymore. He said, ATH Brew, and I will follow you. He's definitely not following. Oh, no. But, hey, I just like keeping it real. You know, if I see a stock that has terrible numbers, I like to just show you the numbers for yourself, and then you can draw your own conclusion. Dylan said what app is this? Yeah, hey, again, if you want to get this app I'm on or this brokerage I'm on, it's where you buy stocks. It's in the link tree in my bio, the very first link there. It is an affiliate link, so if you go and deposit $100, we'll both get some free stocks. Cool things you can... Uh-oh. TikTok said it detected inactivity. Let me fix that real quick. Okay, we just had to fill out a CAPTCHA, but yeah, here's some cool things you can do on this brokerage right here. You can see a bunch of different like watch lists. This is where I find a lot of new stocks. One day I'm going to do a stream where we just look at stocks that sound interesting. Like we'll look for some robotics plays, defense plays. They got a monkeypox plays over here. They just got so many different like sectors that you can find new stocks. And then also the rate cut probability down here. So as we know, interest rates are about to be cut on the October 29th meeting. There's a 95% chance of a 25 basis point cut. And on December 10th, there's another 93% chance of another 50 basis point cut. So the interest rate sensitive stocks could be industry chain. I've actually never looked at this section. Industry chain, quantum computing. Oh yeah, you can click like what, I've done this before. You can click on what part of the ecosystem you want to invest in. Anyway, there's so many cool features about this brokerage that like you can just go and explore. There's the institutional trackers. You can see what Berkshire Hathaway's doing and ARK and all these other ones. Anyway, yeah, if you want to get this brokerage, is in the link tree in my bio, very first link there. But yeah, that was the stream, guys. I hope you have a great rest of your day. I'm going to head off here. But by the way, if you want to hit the follow button, we stream every single day at this exact same time. And also, if you want to support me, best way to support me is just subscribe to my YouTube channel. I'm trying to build up my YouTube channel and my viewers on there. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But yeah, you can just type into YouTube Nathan Roberts. See you, Jello. See you, Catherine Hill. Hey, see you, Hill. See you, Aaron. See you, BT. LQ, Brian, Stefan, Prime Investing, Steven, Marks. See you guys later. I will be live tomorrow this exact same time. And by the way, if you missed anything and want to replay it, hey, Mr. 4, I'm actually going to give you a follow. Thanks for that. Oh, yeah, by the way, watch out for people impersonating me. I'll normally never follow you or DM you. I sell nothing. I have no course, book, WhatsApp. So yeah, see you later. Thanks so much for all the subs. Right. And thanks to everyone on the YouTube stream. I just ended the TikTok one. Y'all are the real ones. So as y'all know, I'm trying to build on my YouTube channel. Hey, if you're still here,